But I think we are going to see a Micron effect, I guess, is a really good point.
And Jay was flagging some of the European read across. It is always complicated to get that European read across from those big AI stories. You know, where does that really play out? But we do see it to a lesser degree in some of those chips.
I think it's also just a sentiment story. I think this has been the core driver of those markets in the States for so long now that if you see a wrinkle in that narrative, then that causes maybe people to have concerns, and that has a portfolio effect.
There's also this kind of just this heavyweight thing, right? NVIDIA is a heavyweight, so sometimes you see the read-through in ASML, but you see the heavyweights here as well. Micron doesn't have that same, well, weighting, quite literally.
Yeah, absolutely. So we'll wait for the start of European trade then, coming in a second's time. European equity markets then, to Guy's point, not expected to go all that far, perhaps a little more upside in Europe than in the United States, but not really by much. The FTSE is open then and entirely flat. US futures are pointing a little bit lower. NASDAQ futures do reflect that Micron negativity, that read across into NVIDIA then as well, perhaps there. So NASDAQ futures down by 0.3%. As we see, the FTSE is flat. The IBEX over in Spain down by 0.3%. The DAX is up 0.1%, waiting for the CAC 40 to open this morning. But we're pretty flat at the start of European trade. Another day in some kind of holding pattern.
I see Caring up quite... Oh, there we go. That'll be the reason why. Caring double upgraded to buy at Bank of America on Gucci brand heat. There you go. Gucci brand heat driving.
You're very into the fashion story this week.
I think the fashion story maybe is... I'm into the equity story surrounding the fashion story. How much I know about the fashion is probably...
fashion story leans into us occasionally. Forces our hand.
We're very fashionable people on this show. I should also point out that ASML, of course, is rallying this morning and moving, is one of your biggest index contributors naturally to the stock 600, higher by only 0.7%, as well. Safran also higher by a significant amount this morning, higher by just shy of 2% this morning. Also, ASML, Safran, and Caring, all your biggest index contributors.
I do wonder whether Safran is just a pick-up off the big hit it saw earlier on this week as we saw the downgrade coming through from Airbus.
So more of the rebalancing story then?
No. Airbus came and said basically our supply chain is causing us problems. Safran is one of the big parts of that supply chain story. It got dinged up pretty badly on the back of that. I think there's a kind of shoot first and ask questions later element to that story, which then gets kind of maybe sort of modified a little bit.
Yeah, the sector picture looks pretty evenly split, reflecting that going nowhere, motif for Europe today. And technology is kind of in the mix, but is dropping down the rankings a little bit, and so we might see a little bit more weakness. But tech stocks just pretty flat actually this morning, in light of what we saw out from Micron yesterday.
Yeah, and I should just mention also very quickly on the kind of downside, we're also seeing healthcare really take a little bit of a back foot here. So ASML is your weight to the upside. Novo Nordisk is your weight to the downside. Sanofi, AstraZeneca as well, in line with some of that move. So I'm not really sure what you make of this picture that we're seeing today. How much of this is just waiting for the next catalyst? Someone more informed might be able to help us out here. Chris Wiley joins us this morning, CIO at Connor Broadley. We thank you so much for joining us. Walk us through this equity market. If we're talking about this kind of unstoppable upside in the States that we saw, yes, a 13% drop in NVIDIA shares that has bounced back very, very quickly. What is the read-through into Europe? Do we care?
Well, it's Europe, but it's global as well. What we've seen in the last few weeks is the market really crowd back into this extremely narrow leadership, which has been a phenomenon which has come and gone over the last 12 to 18 months, and actually we saw it in 2021, and every time it happens, it's been led by the tech sector.
Yeah.
Now, why are people doing that when it looked as if earlier this year we were getting yes, we are still seeing leadership from tech, but we're seeing markets advance on a broad front. We are seeing across regions and across sectors and stocks. And in the last month or so, that broad front has collapsed, and we've narrowed back into the sort of, imperial guard of maybe I'm thinking French at the moment, of IT. Yeah. And I think that actually betrays a lack of confidence. And one of the things which has added grist to that has indeed been the French political situation.
Yeah.
It's got people thinking about, what does this mean for the broader economy? How confident am I about the soft landing? What we see in surveys, there's a lot of talk about belief in the soft landing, but is there the walk? And when I see people crowding into a handful of IT sort of champions, I think, well, that's not the walk. If you really believe in a soft landing, you should be buying cyclicals, and people aren't doing that. So I think that's what's happened. There's been this, and also the other factor has been hawkish Fed rhetoric in the last few weeks, which has also put people onto the back foot. But they don't want to sell the market, so what are they going to do? I'll go back to my cherished five or six IT stocks.
But isn't the cyclical story, to your point, also kind of intertwined with the luxury story, which is also then intertwined to some extent with the French politics story, and it all is tied up into a bow with the concentration risk we talk about in tech in the States, but right here in Europe, it's luxury. Is there a read-through? Is the concentration risk magnifying the vulnerability in the European market to some of that French political risk?
Yeah, I think it's another expression. If you talk about luxury stocks, it's like a European, because we don't have that many true IT leaders in Europe. We've got a few, but it's not like the States, and they're not that they're not the obvious go-tos. So it gets iterated in a different form, and I think what we're really seeing is a kind of growth quality play. And we've had Goldman's talk about granolas in Europe, which is the Europe iteration of it.
So I think sensational six.
The sensational six.
A granola sounds tastier.
It's acronym city, isn't it? But I think the underlying dynamic is the same, which is the walk and the talk not matching up in terms of belief in a soft landing, and people still gravitating towards the biggest stocks with the highest quality perceived growth rather than your cyclicals.
So what happens on the day that Micron misses, or Nvidia, dare I say it, misses?
That is going to be a tough day for Nvidia. Yeah. I think the really interesting question about all this is
for Nvidia or the market, because if people are hiding out, if you're caught in a storm and you're hiding out in Nvidia, and then that port suddenly gets overwhelmed by bigger and bigger waves, there's nowhere to hide.
Yeah, it's the million-dollar question, really. Can we have so when you've got very narrow market leadership, if those leaders get taken out and shot, which is what tend to happen in the past eventually, 70s, the Nifty 50, etc. Does that take down the whole market, or is it the trigger, the signal for people to rotate into other areas? Now, on Tuesday this week, it was an interesting day of price action because that was actually happening. You had NASDAQ selling off, but other sectors rallying. Yep. You had, again, much broader participation, larger numbers of stocks rallying. A kind of immaculate, can you have an immaculate rotation? Is that question. And I think it slightly depends on how quickly it happens. And if it was a big shock from Nvidia, I think that would just ripple throughout the whole market. But if it's something more gradual and people start to anticipate it, and of course everyone's second-guessing Nvidia in that moment, maybe it can happen in a more orderly fashion, which gives people time to rotate.
Talking of shocks, let's talk about France in a bit more detail. Beata Manthe over at Citi notes out this morning talking about 5 to 20% re-rating of French equities on the back of some of their, not terrorist scenarios anymore, a left win, a right win, a hung parliament, some of these kind of difficult scenarios for the market. Does that number sound credible to you? There's a big range. What do you think happens in those kinds of scenarios?
Yeah, well, I think there are clear indications of European markets, French market in particular, being short-term oversold. And, the historical precedents for this, the market normally overreacts to political developments such as this. We've been here before with France, right? It's not the first time. One of the reasons, we have 4 traffic lights in our process, and none of those are politics, because we think that politics generally washes through. If it matters, it'll show up in the 4 other drivers of markets that we use. So, let's look at this instance. And I think history doesn't repeat, but it rhymes. And actually, despite some, I'm not even going to obviously I'm not going to comment on the social political context and how people feel about the RN. But if you look at the economic policies, they're not necessarily that scary, actually, for markets. And if you follow the normal template, which is parties such as these, which come to power, They move from parties of protest to parties of government. They have to moderate, and they are showing every sign of doing that.
Yep.
In which case, this knee-jerk reaction, which actually I think is also a bit of an excuse, for all the reasons I've referenced. People were looking for an excuse to actually pull back. Sentiment has been getting pretty frothy.
Yep.
So here it comes. Here's the excuse. Let's have a pullback. But if the political resolution avoids the worst case outcomes, it could be, I think a rally is totally plausible.
Back to the broader question about where markets head next, Chris, and you talked about this, will we get this immaculate rotation? Does the immaculate rotation take us to, is there a possibility that small caps benefit? I know this is a theme that you have returned to, time and again, that small caps have so far missed out, and the valuation gap between the mega caps and small is historically large, you argue, but does that change?
Yeah, no, that's always the problem with valuation arguments. Valuation anomalies can last for a very long time, and they can go against you even when you think they're extreme. So I think it really comes back to Fed policy. That's what everyone is looking at. And another reason why I think markets have struggled a bit away from the IT leaders in the last few weeks is we're seeing clear evidence of an economic deceleration in the US. That's really coming through. You just have to look at the economic surprise indices and so on. It's hiding in plain sight. Markets have clocked that, saying, okay, we are getting a deceleration, but it's come at the same time as the Fed is ratcheting up this hawkish talk and pushing out rate cuts. And the markets say, oh, this doesn't look very nice, does it? The last thing we want is the worst of both worlds. No rate cuts and deceleration. So I'm not going to rotate into small cap if that's the backdrop. The question is, when does the Fed clock the economic deceleration and do another pivot? And I have to say, the evidence of the last few years is the Fed behaves like a bad fund manager right now, looking through the rear view mirror. Yet every time they've been behind the market, and I think that might be happening now, and in a few months' time we'll see the Fed pivot yet again and say, okay, now the economy is decelerating, maybe we can cut in September. That could be the signal for small caps.
Is that what being data dependent always looks like? Does it always mean you're looking in the rearview mirror? Maybe that's that
winds me up. When are they not data dependent? What are they setting policy on the basis of if it's not data?
It's not the data. Okay.
Is that the market fairies? What is it?
I just wanted to ask you about the UK, because you flagged that small caps could be an opportunity, as discussed, depends on what the Fed does and the like, and where the US growth story goes. But you referenced the UK as having a sort of double discount, because there's small caps undervalued in the UK for the wider global reason, but then also UK being what it has been recently, has been pretty discounted. Do you see anything changing there? Again, is there a catalyst for change?
Well, the obvious one is the election. Strangely, Britain, the second discount, you slightly avoided saying, I think I put it, the discount for being small and the discount for being British, the Brexit discount, if you like, whatever you want to call it. So we're about to get a change of government, clearly. So political stability might suddenly be a tick in the box for the UK, where it's been the very opposite, for the last few years. So that's a good primer. The discount is there. Then we come back to the Bank of England. Can the Bank of England start cutting rates? The ECB started, as we all know. And actually, small cap in Europe has started to pick up since that rate cut. That's a wee bit complicated because service sector inflation is still very uncomfortable. But if we get that, then I think, that starts to line up. So it's there. It's one of those opportunities. You're still waiting for those signals just to confirm, but I think it's definitely there. And that for me, sort of gives me great encouragement as an asset allocator, because I'm not struggling to find things which look like opportunities to me. I'm struggling a little bit for some catalysts, but I know what they are.
We'll know them when we see them.
Yes.
Nice to see you, Chris. Great. Thanks for stopping by. Really appreciate it. Chris Wiley, CIO Connor Broadley. As we were discussing, we've already had the granola, so let's do the call six and figure out what's happening with the big heavyweight stocks here in Europe. As you can see, fairly mixed bag this morning. Novo's a little soft. LVMH up, which is interesting actually, because I would have thought the money might be flowing out of it into Caring this morning in terms of the rotation within that space. ASML not down on Micron. Schneider Electric not down on Micron. And the safe bet in Europe, Nestle, going absolutely sideways right now. But I think Hennes is interesting this morning. That's certainly a stock that I've been looking at and what they've been saying about the economy and their own business. Let's dig into the single stock story in a little bit more detail. Over to Joe Easton.
So we will take a look at H&M. Guy absolutely slammed in the open of trading in Stockholm, down 13% this morning. The company warning of weakness in revenue and also rising costs, things like labour and materials. And June sales will be down 6% year on year, partly due to the weather, but it does re-emphasise the weakness in some of their markets at the moment. We're seeing declines in some of the peers as well, including the Zara owner Inditex over in Spain, down almost 1%. Next, very slightly lower, and AB Foods, of course, which does own Primark, probably the biggest competitor to H&M. That one down 2.5%, a significant read across the fashion stocks getting hit this morning in European trading. We'll look at the chips moves. They weren't as big as potentially we might have expected given that drop that we saw in Micron last night. Micron, of course, fell almost 8%, seeing a little bit of weakness in some European names. BE Semi, ST Micro, Infineon, all coming down. ASML, the big chip machinery firm, actually holding pretty steady, up 0.7%. Micron actually wasn't too bad. It was pretty much in line with expectations, but expectations were elevated given the AI trade. We've got a pharma stock to bring to you over in Spain. This is Grifols. Now, Grifols getting a ratings downgrade overnight by Moody's, who warned on the company's debt load, and we're seeing that stock falling 8%. They are an indebted company that's been targeted by a short seller as well, and that stock's had a bad run, falling even further. A couple of deals to bring you this morning too. Firstly, the Irish government selling around 600 million euros worth of Allied Irish stock this morning at a discount. So we're seeing that stock coming down at 2% today. And DS Smith, take a look at that one, up 6.3%. Now, there was a takeover bid for International Paper, which has actually collapsed overnight. International Paper will now look to buy DS Smith, paving the way for that deal to go ahead. DS Smith up 6% in London. A couple of other earnings to bring you. We mentioned Watches of Switzerland in Stocks Watch. We're getting a boost there. The US market is strong. The UK and Europe still pretty weak, but the US now around 40% of sales. So that is coming up. But Currys falling further into the open of trading, now down 5%. Some weakness in the UK retailer. Their outlook for TVs and radios, that kind of thing. The electronics good, that one is coming down 5%, so not great on that one. ASR Netherlands doing a big share buyback. This is the 9 billion euro insurance company over in Amsterdam. Couple of morning calls to bring you. Kering, this is a big one, double upgraded at Bank of America, which says peak Gucci bearishness is over, and they recommend buying that one. That's up 4.9% in Paris. 450 euro price target, pretty punchy. It's only trading at 340. Bank of America likes Gucci. And finally, going the other way, we've got Anglo American. This one is downgraded to sell over at Berenberg, who says their strategy execution will need to be perfect after the BHP takeover did fade away, and that stock's falling 1.8%. Gucci higher, Anglo American lower. A lot of movers on the market today for you this morning.
All right, Joe Easton from our equities team walking us through those early market moves. We thank you so much. Coming up on the program, H&M plunges after profit misses in the second quarter. We're going to dive into the details on why next. Stick with us. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Middle Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
This is Markets Today. We're just coming up to 20 minutes past 8 here in London, so 20 minutes into the European trading session. The FTSE 100 is pretty flat. Elsewhere, we're seeing some gains, in particular in Germany, actually, up by 0.4% on the DAX this morning. Let's talk about one stock that is really underperforming, H&M in the clothing retail space. Shares have slumped this morning after the retailer reported weaker than expected profit for the second quarter. The Swedish retailer is blaming poor sales at the start of June due to bad weather. Let's get more on this story with Bloomberg's consumer goods reporter, Dasha Afansieva, who's with us this morning. Dasha, good morning to you. So how was the quarter for H&M? Take us through what we learned this morning.
So actual sales were roughly in line with expectations, and there was a beat on gross margin. But the real problem area here is for the quarter was the operating margin, which for the first half of the year is around 8%. And considering that the new chief executive, Daniel Erver, wants it to be 10% for the year, he's going to have to make a lot of improvements. And, they've already closed down some stores. They closed down about 80 stores compared to last year. And he is getting costs under control, but it seems those are at the gross margin level as opposed to his actual overheads. And there was also a bit of weakness in Asia, Oceania, and Africa. It was flat in local currencies and actually down in the Swedish krona.
I remember the weather was bad, but I don't remember it being that bad. And I'm wondering why I haven't heard of this from other retailers.
Well, absolutely. And I think the stock is probably down today because he's talking about the current quarter and warning about sales being down 6% in June. Inditex for May, we don't know about their June yet, but it had strong outlook for May. So it does kind of raise questions. And they said, it's getting better towards the end of the month, which is where we're at. And they're also looking at, they're also saying that the conditions, they're sticking to their targets of particularly this 10% operating margin target and also doubling its sales to 2030. They're sticking with that, and those two things are very interlinked because in order to reach the operating margin improvement, you need the sales growth.
You need a lot more sales.
You need a lot more sales, but they are also warning that conditions are a lot tougher. And it's sort of like, well, if conditions are a lot tougher, then what extra do you have to do in order to get there if you're keeping the same targets?
So how does this relate or not relate to the C-suite changes for the company?
Yeah, I mean, the new chief executive has only been here since January. That was quite a surprise for everyone. And he's really trying to prove that the turnaround is working, that his targets are working, that his message today was, despite all of this and despite then, the share price fell, his message was, this is the best quarter we've had for years, and it's working, and the collections, the spring and summer collections, are proving popular. But of course, we don't actually know know the latest inventory numbers, and that's a key issue. And if he's guiding that actually there'll be more promotions in the second half of the year and that the environment is getting tougher, you can kind of see why markets are a bit worried. And that's all against the backdrop of trying to compete with internet-only companies like Shein, which of course is going to be listing in London and is going to be a source of competition also from the investor side as well as the consumers.
All right, Bloomberg's consumer goods reporter Dasha Afanasieva, we thank you so much for breaking that story down. Those shares down by about 14% this morning. And sticking with another major decliner in the last 24 hours, let's go to the story of Micron, declining in after-hours trading in the States after its forecast disappointed investors who are seeking a bigger payoff from artificial intelligence mania. Now, the chipmaker's outlook roughly in line with estimates, profit even coming in a little bit higher. The company punished for not outperforming elevated expectations. Let's get more on the story. Bloomberg's Daybreak Europe anchor Tom McKenzie will be joining us to walk us all through this. Tom, there was a massive gain into the market close and a massive sell-off after. What did you take away from the Micron story?
Christy, look, I think you're absolutely right to reflect on the fact that the earnings for the quarter that they reported on came in line. In fact, as you say, profits and revenue actually came in with a modest beat. It was the outlook that was a concern, but it's also worth reflecting on the fact that they raised their outlook to a range of between $7.4 billion and $7.8 billion US for fourth quarter sales. At the top end, that's actually above the average estimate. The problem is that some estimates, some of the outliers, had seen potential sales in the fourth quarter of $8 billion. So again, it's about that gap between expectations and delivery when it comes to this AI theme. A couple of challenges for Micron. One, yes, they have benefited from the demand around AI because their high bandwidth memory chips, their HBM chips, can work with NVIDIA's GPUs in these data centers. The stock is up about 65% as a result of this. But they are not the NVIDIA of the memory chip segment. They can be interchanged with competitors, so they're vulnerable on that front. They actually need to build out capacity. They're spending about $8 billion US on that front. But that's leading concerns that maybe there will be a glut of these chips in the future. But again, the company is saying that the demand is still outstripping supply. But again, they're interchangeable. They're spending heavily on capacity. Does that lead to a glut going forward? And they're still facing a challenge from smartphones and PCs.
Tom, the issue here seems to be that the market was just simply expecting a beat and a raise. And that seems to be the normal now. To your point, that is maybe something that is less deliverable when it comes to Micron than it is with NVIDIA. But are expectations of just breakneck growth so embedded now in expectations that you are going to miss at some point? And is that really the takeaway here, that at some point NVIDIA is going to miss as well?
The takeaway is certainly that you don't necessarily paint all these companies with the same brush. You have to distinguish between the upside and the opportunities for Micron versus NVIDIA. NVIDIA still has 90% approximately of the market share around AI accelerators. They still have the chip that is the most efficient and most powerful. AMD, Intel working on competing, but still that gap exists. Micron, though, is interchangeable, and that is a risk if things start to slow.
Tom, thanks so much. Bloomberg's Tom McKenzie, Daybreak Europe anchor, of course, with the latest on the tech stories. We'll continue to monitor any read across we see from that tech theme into Europe. We'll think about the trading day ahead as well. More coming up. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Markets Today. We're about 30 minutes into the European trading day, seeing a little bit of mixed action on the surface when it comes to the index level. But when you look at the currency picture, you are going to see perhaps a little bit more moves. 106.94 on euro dollar. We are just now getting the Sweden Riksbank result, leaving their policy rate at 3.75%. The estimate there was 3.75 as well. So the concern was, do they start to see some sort of movement in either direction? You're not seeing much of a reaction when it comes to the Swedish krona against the euro. That's really all I have to say on this. Kind of
okay, look, there's a few more things to add in here. They are lowering their forecast in terms of inflation. They now see 2024 consumer price inflation at 2% versus 2.3% previously. So they're downgrading that estimate. So that leads on to the other policy statement that they're announcing this morning, that they can now see the policy rate being cut 2 or 3 times more this year.
Which is interesting, because I think the expectation previously was 2 times.
Yeah.
So 2 or 3 is a bit more dovish.
This feels significantly more dovish, I think, in terms of what they're saying in terms of their inflation expectations, which is unsurprising why we're getting the reaction with a stronger euro this morning on the back of this. I find this interesting in as much as I would have anticipated, given the caution we see at the ECB right now in terms of how it sees policy developing, that maybe the Riksbank would follow that narrative, and it doesn't. It feels like it's being much more clear-sighted in terms of what it thinks it can achieve this year in terms of rate cuts and where it thinks its inflation path likely lies.
You know, this is interesting, though, relative to the Norges Bank. And the reason I compared the two is not only just regionally, but in terms of some of the risks and the expectations going into it. Look at the market reaction in terms of that strength. When you start to see some of these other central banks in Europe, actually, it kind of creates a little bit of a buffer for the euro at a time when we're talking about geopolitical weakness and political weakness as well in terms of the central banking story. But that all has an impact on the rates picture, and therefore not only and deal flow as well. How much in terms of things like issuance do people actually care about, and what does that mean then for things like buyout exits? We asked a slew of people at the very helm of that story at our Bloomberg Invest conference in New York. Take a listen to what they had to say.
The deal flow is still not quite there.
Private equity has slowed a little bit in the activity.
In our pipelines, we're seeing a meaningful acceleration in deal flow.
The key concern we have is, will there be activity where the buyers and sellers meet in the middle? And that hasn't quite happened yet, but I'm hopeful it will.
For the credit markets, you still have a lot of options, whether it's a recap, a minority sale, and that's what we're seeing. So it may not be asset sale outright, but a transaction is going to occur.
Now that rates have stabilized and that cuts are on the horizon, we are seeing the pipeline pick up meaningfully. which means you should start to see more deals, more velocity, and even if the base rate comes down, it's still going to offer a pretty attractive rate.
Let's get a little bit more on this story. Joining us now, Stephanie Drescher, Chief Client and Product Development Officer over at Apollo, joining us right here on set. Good morning. Pleasure to have you on the program. Talk to us about deal flow here. There's a little bit of a backlog in the private markets at the moment in terms of some of those buyout exits. Do you have a time horizon? Do you have any sort of outlook on when we could see capital markets activity really pick up?
Look, I think it's all about navigating and choosing kind of the right companies in the market environment. At the end of the day, you know, for our approach to this market and frankly over cycles, it's ensuring that the purchase price entry point really matters and can influence the outcome. And frankly, it gives you more flexibility in how you adjust and less reliance on the exact timing of the exit. So we can be patient in terms of navigating the market environment. We're certainly picking our spots and finding those moments to exit. And I believe actually that on a relative basis, we've actually been quite strong in those distributions of late. But the purchase price matters.
Well, speaking of the purchase price, there are, of course, we've talked about this in the public markets, where there's such a rally and such strength when you look at the technology space, specifically around AI as well. That is having ripple effects into the private markets, where software deal premiums are significantly higher than the rest of the market. Is that priced to perfection, do you think, or is there some room to let go there?
So, look, we're very focused on the overall valuation equation in the markets generally. And actually, when we think about public versus private, it's part of the reason that we believe that private market exposure in portfolios is incredibly important over time, but certainly in today's market. In fact, when you look specifically at the public market valuations coupled with the concentration, where the performance is coming from, to your point, we're seeing that over 90% of the returns, let's say in the S&P, are coming from fewer than 10 companies, likely 3, to your point, where when you take a step back, nearly 90% of the companies that generate revenue over 100 are actually private. So the percentage of private companies out there dwarfs the public at a time where even the number of public companies have actually been cut in half since the mid-90s. So I think it's concentration coupled with valuation in the public markets that is kind of driving the focus on the diversification one can achieve through private exposure.
Can I ask you about geographical diversification then and allocation to Europe? Because I know you've recently been at a fund forum in Monaco, perhaps picking up some thoughts from investors either from France or about France and what impact that's having on sentiment towards this region. Is that something that was dominating the conversation?
You know, it was certainly a part of the conversation. I wouldn't say dominating, but look, it's a time to be prudent given the potential volatility that comes from the political and geopolitical backdrop. And I think people are certainly mindful as we head into July and looking and watching closely. I think, you know, from a manager selection perspective, it also puts the focus on those, and we hold ourselves in this camp, that can navigate economic and political cycles over time, recognizing that potential volatility.
Do private markets protect me from the volatility around the politics that we're going to see, though? You've got what is happening in Europe. You've got what's about to happen in the United States. We've got the debate coming up a little bit later. Is that a way of dealing with some of that volatility that we're likely to see coming from the politics?
Look, we do anticipate on a global basis that, and certainly in the U.S., as you referenced as well, that volatility will remain high. And in the private market, certainly as we approach it, first off, we ensure from an underwriting perspective upfront that we anticipate volatility over time. But as you think about the opportunities that can present themselves, given the volatility in markets, we want to ensure that ultimately we're working on behalf of our clients to navigate that and to deliver the excess return that sometimes can ultimately be created by that volatility.
In public markets, diversification has become synonymous with underperformance. Yeah. Is that true in private markets? You were just talking about the kind of the breadth of the companies that exist out there. Is the same story true in private markets as it is in public markets? Because it's really clear in public markets.
Yeah. So I would say no.
Yep.
When we think about portfolios and kind of the overall portfolio construction, a topic from the conference was how to think about diversification between public and private.
Yep.
And recognition that increasingly public exposure, which was historically thought of as safe because it was liquid,
yep,
and private markets historically thought of as risky because it was less liquid. Increasingly, the conversation was about how both public and private can be safe and risky depending on the manager. But introducing the private exposure and adding that element of diversification, we believe provides that excess return, and certainly ultimately is an advantage to the investor by adding that incremental exposure.
So there's diversification in deal flow, and then there's diversification in players as well. Just in the last 10 years, that relationship between private capital and the banks is really fascinating. Not to mention even retail entrants starting to get in on this juicy yield, which that's a whole other story. Talk to us about that kind of gap in financing, essentially. When the banks pulled back post-GFC, private capital stepped up. How much of that is a problem, given it's fairly illiquid relative to, say, an IPO market, for example?
So you're right. I mean, stepping back, there are two sources in the credit markets in terms of lending and financing. You have the banks, and you have kind of what I'll call the investor marketplace. And those are managers. It's also mutual funds and sovereigns and pensions, insurers. And clearly, given the regulation, whether it's Basel or others around the world, the regulators were shrinking balance sheet.
Yeah.
And so the natural and logical outcome of that is less lending activity from the banks and more from the investor marketplace.
But is that risky?
So
Jamie Dimon says it's risky.
Our view is that it's healthy because it does provide the incremental capital needed to fuel economies and ultimately does it in a way that's deleveraging. So we believe it's healthy.
The private markets space is becoming more and more crowded. Are returns going to get harder? Is it going to get harder to outperform in private than it was even a few years ago as more and more people put capital to work in this space? What are my returns going to look like? And are they going to become, am I going to have to fight harder to get them?
Look, I think there's manager selection has always been important, and I would expect diversion of returns based on managers in the private markets, which goes back to ensuring that you're with someone who can, in fact, navigate cycles and think through not only kind of the entry point, but also how they ultimately deliver that alpha and value creation. So it matters.
Stephanie, thank you very much. Thanks for joining us. Good to speak to you. Stephanie Drescher, Chief Client and Product Development Officer at Apollo, here to talk private markets. Let's go to a UBS story that's given us a red headline whilst we were having that conversation. And this is to do with the wealth management business, the wealth strategy over at UBS. UBS is creating a new wealth unit and they're reorganizing their global wealth management arm. It's the first major move by new leaders in that department, Rob Karofsky and Iqbal Khan, who you see on the screen. I understand they're pursuing a long-standing aim of bringing more investment services to ultra-rich clients. That seems to be the guiding force behind this reorganization as this business reshapes itself, no doubt, post the absorption of Credit Suisse. Coming up, EU leaders are expected to nominate Ursula von der Leyen for a second term as president of the bloc's executive arm. More on that as we look at the EU Leaders Summit. Still to come. This is Moonbag.
recently, I believe, is that you're going to do something called the Steve Jobs Archive. And what is that designed to do?
We are trying to honor and elevate individuals through the inspiration of Steve and his life. But I think much more importantly, we are trying to find the best way to communicate to others his ethos and his sense of enormous human possibility so that people can encounter the archive and feel inspired to do something even greater in their own lives, or to stretch what they think is a boundary or something that they didn't contemplate for themselves. So we are still in the collection and development mode. We're building out programs. I think you'll see in the future, you'll see some scholarships and fellowships. You may see some publications, but it's much more about forward-looking and inspiring people to think about how they can be part of positive movement.
This is Bloomberg.
And I just want to address Beverly's point.
You opposed it when I announced it. You literally opposed it.
If you listen to people in the audience across the country more often, you might not be quite so out of touch. Beverly.
Could we get a better trading deal with Europe?
You might be able to. But do you know what the price of it will be? It will be free movement of people. And that's what Keir Starmer's not being straight with you about.
Got a little spiky last night, didn't it? UK Prime Minister Rishi Sunak and the leader of the Labour Party, Keir Starmer. I wonder how long Keir Starmer thought about that line to deliver it at the right moment. He was perceived last time as being a little slow, maybe off the mark, in pushing back against Rishi Sunak. That seemed to change a little bit last night. A little bit more pugnacious, a little bit more punchy from Keir Starmer. Let's talk more about what we learned last night. Bloomberg's managing editor, the EMEA news desk, Adam Blenford, joining us now on set. What's the takeaway?
The takeaway was really that Rishi Sunak also came out quite a bit more pugnacious, a little bit more punchy. He was pretty crisp and effective at delivering some of his attack lines, but as you said, Starmer parried them pretty nicely. The end result, perhaps, though, that the Conservatives and Rishi Sunak's party has been significantly behind in opinion polls for the whole duration of this campaign, and they really needed a kind of a knockout blow. They really needed to be on primetime television last night, finding a way to make the case and landing that argument very convincingly that Labour were not the party that voters should go for next week. And realistically, the snap poll results at the end of that, a couple of which we saw, did not suggest that Sunak made that case.
Yes, it was just 50-50, wasn't it? A pretty even split in terms of who came out on top, according to what some of those polls. Who did you get a sense that these leaders were talking to? Guy was making the point last hour, which I think is valid, that it sounded like Sunak was preaching to the Tory base, really, talking about not surrendering, in his words, on a number of issues to the Labour Party. Starmer maybe talking to a broader audience than just maybe the traditional Labour base.
I think that's right. And in some ways, Rishi Sunak's talking to what perhaps used to be the Tory base, or he has seen also part of the coalition that eventually elected Boris Johnson 5 years ago, which was formerly a Brexit voting base and people who've traditionally voted Conservative. A lot of them have, according to surveys, been looking like they're heading towards voting for the Reform Party, and that shapes quite a bit of Sunak's narrative, where he's talking tough on migration issues and equally on Brexit, that idea of freedom of movement. Starmer, it's interesting that he got a particularly kind of warm reception when he focuses on this idea of service. He talks about the idea of trying to fix the country. He always stresses his family heritage, his and the more humble upbringings from which he he's come.
Toolmaker, got to mention.
Toolmaker, I wasn't going to go there, but he often does.
Tick.
Tick. And so he talks with a degree of earnestness about trying to sort of right the wrongs of the country or fix some of the problems that the UK faces. And so that's a partly different approach from some of Sunak's a bit of tub thumping occasionally.
All right, Bloomberg's managing editor for the EMEA News Desk, Adam Blenford, walking us through some of those debate details here in the UK. There's plenty more debates to come, though. Let's talk about what else we're going to watch out for today. The U.S. and France both have debates tonight. France, I want to say tonight. The U.S. at 2 a.m. if you are staying up and waking up for it. We will, of course, have full coverage for
Is that your Wednesday or your Thursday? Sorry, Thursday or your Friday, Chrissy?
Oh, I'm going to wake up early.
I am planning to. I'm planning on waking up at 1:30, rolling into the office at 2, watching the debate.
At some point, just checking.
We will find out. I will report live and let you guys know.
BBC.
But yes, there will be the debate. And then it will be on Bloomberg Television for that coverage. But it's not the only thing. We've got plenty of data on both sides of the Atlantic as well, plus those Nike earnings. We're talking about the Micron read-through. What's the Nike read-through, especially when that China exposure story? That might be more relevant to, say, a luxury story here in Europe, for example.
What's going on with the consumer?
Yeah. What's going on with the Chinese consumer?
Yeah.
And really cross into Adidas then, we'll certainly keep that in focus. In terms of the US debate though, Critty, so we talked last hour that some of it will be about the way that the two candidates present themselves, how in command they appear to be, but also from an economic perspective, I suppose we're looking at trade policy. What else is going to be in focus?
Yeah, trade policy. Anytime China is mentioned, any sort of foreign policy around the two wars in this region between Israel and Hamas, and then, of course, in the war in Ukraine, and what that funding story actually looks like. Remember, President Trump has been very vocal about his role or lack thereof in the war in Ukraine, very famously saying that if he were president, this war would not happen, at least the one in Ukraine. So that's going to be one thing to watch out in terms of the foreign policy, simply because Biden is talking a lot about losing a lot of the votes from the younger voter off of, again, the war happening in Gaza.
I thought it was interesting when we heard from the US ambassador to China earlier. He was saying that he thought China had miscalculated and underestimated the United States' commitment to Europe in terms of its peace and its unity. And he's obvious that seems to fit with what we know about Biden and his priorities. But you look ahead to November and you wonder how that changes.
What is new that comes out of tonight? You think about kind of what is happening in the United States right now, two polarized camps on either side, right and left. You've got a bit in the middle, which is actually maybe quite substantial this time round, a lot of undecided voters who don't necessarily like either candidate. Are they going to talk to them? Who is the audience tonight? Is it that group, or is it simply these guys are going to be talking to their bases and trying to score points off each other to support those bases? That's the bit. I hope it's the former and not the latter.
One would hope, but it will probably be the latter, simply because their policy agendas are so different. They'll be talking about things like gun control, abortion, immigration, et cetera. I think for a financial audience and economic audience, the question is, what do spending priorities actually look like? So, for example, more energy infrastructure, more defense infrastructure coming out from President Trump, for example, more green spending, for example, coming out from President Biden, and benefits that go to things like Social Security, that go into VA, et cetera, things like that. Those are going to be concerns for the bond market in terms of the deficit. But then even from a stock-specific story, both candidates are actually aligned on being tough on China, bringing more production and manufacturing back onto U.S. soil. We bring it back to the Micron story. $6 billion of that company is coming from chip grants coming from the Biden administration.
Okay, we will focus in on that particular debate then, and the French one, of course. We shouldn't forget, because that also for a European audience really important. Thinking of European politics, European Union leaders are meeting today as they look to wrap up a deal on the bloc's top jobs. They are poised to nominate Ursula von der Leyen for a second term as president of the EU's executive arm. Let's get now to Bloomberg's Oliver Crook, who is standing by in Brussels with more. Ollie, good morning. So first EU Council meeting since the election. What do the leaders need to get done? Because they've failed to appoint people to these top jobs on one occasion.
Yeah, and it was supposed to be an easy fix last week. They said they were really going to sail through these nominations. They were going to be uncontroversial. They were going to get it done last week. Obviously, that didn't happen. We're hearing some of the same rhetoric going into the meeting today, but they really do need to cement those top jobs. And so really the top jobs are the EU Commission President, which is likely going to Ursula von der Leyen, the Foreign Affairs Chief, which is going to Kaja Kallas, likely from the Renew Party, and Antonio Costa is going to get the EU Council Presidency. These are the three top jobs. These need to be established. The reason it's important that they need to get doled out is because every other job, all the other other commissions, all the other sort of favors, that trickles down from those appointments. What they also need to do is get their strategic agenda in shape, and that is basically the document that sets out the outline for the EU's priorities going forward for the next 5 years under this new government. We'll see a lot of the similar themes we've talked about over the last couple of months and really years, which is Ukraine, defense, security, competition will all be part of it. And of course, today, to sort of bring that into focus, we have Zelensky here in Brussels meeting with EU leaders. They're going to make a sort of firm commitment about the sort of continuing security pledges, formalizing that. And of course, also this week, guys, the accession talks with Ukraine. They officially began negotiations about Ukraine joining the EU. This is a very long process, but this is, of course, a very sort of symbolic and important step.
Interesting to see whether von der Leyen can get through the EU Parliament. I think that's going to be an interesting dynamic as well. Ollie, draw a line between how people voted in the elections, the EU elections that just took place, and what the next Commission's priorities are going to look like.
Yeah, well, listen, Guy, I mean, I think it's really interesting to talk about the power dynamics and how they're evolving, right? Because Meloni doesn't technically have a vote in terms of the top jobs here, because that's really the coalition of the sort of main three parties, though she is the third most popular party. So the question is, how does she sort of exert her power within the EU? And that is something that we're sort of finding out as the days unfurl. Yesterday, she was in Italian parliament sort of railing against the EU, saying that, you know, the job appointments are done sort of undemocratically. Today, she comes here to have those discussions. So this is part of the question. How she exerts her power going forward, particularly with Viktor Orban and Hungary taking the EU presidency starting July the 1st. So while they may not be able to affect the top jobs, their huge bloc will potentially bear, Guy, as you were alluding to the vote within Parliament. On the other side of things, you have Macron, who's obviously running an election campaign. That is the other big elephant in the room here. His priorities will certainly be diminished, whether it's joint debt. He's been the sort of big advocate for that. But of course, let's not forget, if you get a far left or a far right government within France, both of those things are bad from the EU level. Far left, deficit spending. France is already in big trouble. On the far right, they're already running on a platform to basically cut contributions to the EU budget in order to fund some of their plans within France.
All right, Bloomberg's Oliver Crook in Brussels walking us through those dynamics. We thank you so much for doing that. The point that he makes is one in terms of how do you trade this? As we watch all of this unfold, what is the tradable story in the next 48 hours? And I'm willing to venture out and say it's actually the PCE number coming out on Friday above everything else.
Well, that's what Chris Wiley was saying to us, that they look at four sort of themes around markets, and politics isn't one of them. They think it plays in through these four levers that they watch, but they feel it comes out in the wash.
Biasum Anthony thinks 5 to 20% re-rating for French stocks. I just throw that one out there.
When does that happen, though? Does that happen in anticipation, or does that happen after?
The implication is post the election. If you get some of those scenarios playing out that are difficult for the markets to manage, those are the kinds of reactions.
It's the theme of 24, isn't it? The way that politics rubs up against markets.
Yeah. And again, it comes back to defense spending. You're not seeing the same move in those defense stocks that you're seeing in other parts of the market. Your ASMLs, your Novo Nordisks, for example. There's lots to digest. Not to mention the currency picture. We didn't even go into all those euro-dollar dynamics.
More FX for Chrissy tomorrow. That is it for markets today. The pulse is up next. European stocks making very slight gains this morning. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
DOJ or other authorities.
Could face bigger challenges.
Britain's next was going to keep rain World Cup. This is a 3 as the economic picture covering the intersections of Hollywood, Silicon Valley, and beyond.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. Here's what's coming up on today's programme. Micron tumbles in after-hours trading as the memory chip giant fails to meet sky-high expectations. Despite the market volatility, Bill Gates remains bullish on AI, saying the hype is justified. We have more of our interview with the Microsoft co-founder. Plus, UK Prime Minister Rishi Sunak and Labour's Keir Starmer get combative in their final TV debate 1 week ahead of the general election. Let's check in on these markets then. Yes, concerns, it seems, as to the expectations not being met by the reality, at least for some investors. And again, the expectations stretched when it comes to the story around Micron. They did actually beat in terms of the earnings story. The outlook, though, for some causing concern, and that stock taking a hit. And the read across to the Asian semiconductor makers and European chip makers as well is there for us. We keep an eye as well on what's happening in the retail space at the lower end and the higher end, because you have an upgrade coming through for the likes of Kering, but H&M missing on profits. You can see the mix there across the map. S&P futures, meanwhile, pointing to modest losses around 0.2%. Nasdaq futures pointing lower by 61 points, and certainly Micron will be part of that story. On the consumer of the US, we have the retail story there as well, with Nike earnings out later today, but also the GDP print as well, as to whether or not that gives us more colour and more info as we look ahead to that potential Fed move later this year, with inflation, of course, coming through with PCE on Friday. European stocks across the benchmark currently flat. Cross asset, bit of selling pressure coming through on treasuries yesterday. Today, you're flat essentially on the benchmark 10-year at 4.33, as yields did tick up marginally yesterday in the session. 106 on euro dollar. A little bit of strength coming through on the single currency, up 0.1%, largely down to a little bit of softness for the dollar, given the gains that we've seen in the last few days, of course, for the greenback, well, year to date, really. $85 a barrel on Brent, currently up 0.4%. We continue, of course, to monitor the inventory story in the US as we lead up as well to the key summer driving season. Let's check in on Micron then, pre-market. And again, it was the outlook story that for some disappointed, didn't quite meet the most stretched expectations. They still have a backlog of orders and a building capacity around that. And that's part of the story for Micron. But this is the chip maker, of course, around the memory chips that work with NVIDIA's GPUs. The demand has been there. The stock is up about 65% year to date. But as you can see, pre-market, Micron down a little over 6%. NVIDIA also feeling the cold ripples of that Micron story as well, currently down 1.6%. It's been a volatile week for that maker of AI chips, of course. Let's bring in, on the markets view, of course, and what is happening particularly in the tech space, JP Morgan Asset Management, Chief Market Strategist, I should say, for EMEA at JP Morgan Asset Management, Karen Ward. Karen, thanks for joining us in the studio. Let's start with what we've learned from what's happening in the tech space this week. We've had the volatility around NVIDIA, that 3-day slump, then it rallied, now it's under pressure again. Micron coming in with an outlook that for some missed expectations. Does it suggest this fragility around the AI theme?
Well, I think what we know relative to 2000s, because obviously everyone's comparing to the 2000s, is many of these companies are delivering fantastic profits. The reason NVIDIA's done so well is largely because of the profits delivered rather than just what we were hoping for the future. So in that aspect, I don't think tech broadly is a bubble. However, what we did learn from the 2000s, and this is what I think we're starting to see now, is usually not everyone is a winner. And working out which are the specific companies which are going to take the market share, really be the dominant player. That's the really tricky part. So I think for us, it was about, acknowledging the tech story. There is definitely tailwinds to where this is going. We are believers in AI being a powerful force, but perhaps being careful about how you're actively managing some of that concentration risk. But also, I think, thinking more deeply, because, of course, tech versus the rest is the big question. Just stepping back and thinking, well, if AI is going to be so transformative, they need consumers for the product. So looking outside of the big 7 to the other 493 or elsewhere in the world and thinking about what are we hearing about how other companies are going to use AI, and that will tell us a lot about the future earnings of the big 7. So for us, it was a little bit about carefully managing the concentration risk, but taking perhaps advantage of the consumers of AI rather than focusing squarely on the producers, which I think is where the market's been so far.
That's interesting. In terms of allocation then, would you take some profit in some of those big tech names to allocate to the consumer play around AI, or is it a little early for that?
No, absolutely. I think that's the right thing to be doing. And also it is just about managing concentration risk. NVIDIA 6% of the S&P. And I think one of the things that concerned me was when I look at the earnings expectations for a company like that at the end of next year, and these are people whose sole job is to analyze this company and consider where it's going, which is not my job. I'm a macro strategist. The range of those earnings expectations is so wide. So given that, I just don't want quite so much risk in one single stock. And therefore, for us, it has been about just actively managing and starting to maybe shuffle towards the beneficiaries rather than the producers.
And on that concentration risk and the lack of breadth in this market, particularly, of course, pronounced around the S&P, is there a change in narrative when the Fed finally does cut? Is that the catalyst for a broadening out of this market?
No, I don't really think it is. I mean, I think monetary policy, one of the big things we've learned over the last few years is that monetary policy is not as potent. And therefore, rate hikes didn't hurt as much as we thought. And similarly, I don't think rate cuts are going to be the big story. Fiscal policy is far more potent than monetary policy, I believe. And we still have fiscal tailwinds. The checkbook is still pretty much open in the US. The IRA, the Jobs Act, the CHIPS Act, all these multi-year programs are still a huge stimulus through that economy. And that, I think, is still going to be, the significant tailwind. So I think it's more about how the story broadens out from the underlying fundamentals. The Fed could help the narrative. I think people in small caps are waiting for the Fed as an indicator to move there. But no, I think we place too much weight on interest rates and how that's affecting.
Because I think for a lot of people, when you think about fiscal stimulus, you think automatically about the stimulus checks that came through for consumers and households, and the fact that we know the data suggests that's starting to dry up. But you're pointing and reminding us of the fact that we have these long-term programs backed by that spending that is not going to be derailed, at least in the short term. And you see that as being supportive for these markets. The markets, broadly, on an index level, do have momentum thanks to that.
Yeah, I think so. I mean, look, the US is still running a 6% deficit. I mean, in the whole US exceptionalism discussion, the one thing I do always remind people is, well, the US is running a 6% deficit at a time of record low unemployment. That is certainly helping, I think, with how the US economy has proved resilient, how earnings have proved resilient, and neither candidate are talking about reining that in.
You see a convergence, though, between the US and Europe. What is the approximate time frame for how you have that in view, and how should portfolios adjust around that?
Yeah. So before the French election, for us, it was all about the macro, because I think in Europe, we really haven't yet had our post-pandemic bounce. We came out of the pandemic into Russia invading Ukraine and an extraordinary cost of living crisis. So we still have those pent-up savings. Our consumer has been rocked. Our consumer has been lacking confidence for the last 2 years, understandably, but we're coming out of that now. So I think much of the growth, the consumer growth that the US has experienced last year, I think in Europe we're about to see some of that come through. So I do see a consumer uptick coming through. Now, at the moment, the market has taken a step back from that optimism, or at least the green shoots of the optimism.
Is that a buying opportunity?
I think it is. I think in a couple of months' time we won't be talking about French politics at all, because I think, particularly what international investors I don't think have quite yet understood entirely is this is not 2011, 2012. None of these more populist parties are advocating leaving the euro or advocating leaving the EU. This is about migration, which is a thread that we're seeing in politics across the West. And it's also, in many parts, about a more business-friendly regulatory system. So I think that is, to me, and I think also that the need for a degree of fiscal prudence following the experience. Perhaps the UK gave a good example of how governments can't push the envelope 18 months ago, of course, with the events that happened here in the mini-budget crisis. So that's brought a degree of reality to the fiscal discussion. Most of them are talking a pretty sensible fiscal game. And therefore, I think, whatever happens as a result of the French election, the cohabitation, at the moment, working on the basis it's going to be with the right, and I don't think it's going to be... So
sectors like French banks down about 10% since that announcement by President Macron could be an opportunity.
Absolutely.
Okay. When it comes to the UK, I want to draw on your experience at the Bank of England, your previous experience, of course, as an advisor to the MPC at the Bank of England. What is your view in terms of how the rate cycle unfolds? Is August, I should say, locked in for you at JP Morgan in terms of the BOE going? And how do you see that cycle of cuts coming through for the central bank?
The Bank of England seem to really want to cut. I think they are concerned that these policy rates are restrictive and this is just long and variable lags. So therefore, I think they would present it as, this isn't easing, this is us taking off it slightly off the brake. So they need the data, however, to confirm that that's the right thing to do, and the data hasn't gone their way. We do need to see that softening in the domestic inflation rates. We need to see wage growth coming off more broadly across the indicators. We need to see service sector. I do think they'll get some of that. I still, at the moment, think August is the most likely, given they seem to really want to cut. Maybe it gets pushed out to November, but either way, I certainly think that the next move in the UK is down.
Very briefly, before we let you go, the MSCI China Index falling into correction territory today, down about 10% from its highs in May. Can broader EM perform without the China equity impulse coming through?
It's a great question. It's the question I think I'm asked a lot at the moment. I would say in the short term, it's a little bit more challenging. The routes in which China supports the broader complex, its commodity demand, tourism flows, make the outlook in its neighbours a little bit more challenging. However, medium, and maybe we're only talking 2, 3, 4, 5 years, some of China's woes actually are real benefits to elsewhere in the region. I've been so surprised how quickly we're seeing trade routes reshuffle, how the friendshoring narrative is playing out. And therefore, you're seeing low value-added manufacturing move South Asia, high value-added manufacturing move north, movements to Mexico. So I do think, actually, that some of China's weakness, and particularly in how we're seeing these trading relationships change, is going to really benefit other parts of EM.
OK, Karen Ward, thank you very much indeed. Chief Market Strategist for EMEA at JP Morgan Asset Management, with a view there on EM, adjusting supply chains, maybe how to invest around that, and a view that the BOE probably goes in August, and the tech rally has further to run, but you need to distinguish between those major AI names. Coming up, Bill Gates tells Bloomberg that AI's green benefits, the green benefits of AI, we know it's an energy consumer as well, will outweigh its emissions. We're going to have more from our interview with a billionaire climate tech investor and, of course, Microsoft co-founder. That is next. This is Bloomberg.
Trends in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
Innovation has to happen everywhere. We have really thought about how do we partner with people to bring an innovation theory to different parts of the world. How can we participate and help? And so we're really grateful. We've got a new program, you might have heard about this, with Singapore, where we are partnering to do some expansion of our fellows program for the region, really to spur innovation there, drawing entrepreneurs, do what we do in all the rest of the parts of our work is try to help innovators, succeed.
And that was Roddy Guidero, the Executive Director of Breakthrough Energy, the clean tech investment firm founded by Bill Gates. Now, Michael Bloomberg, the founder and majority owner of Bloomberg News, parent Bloomberg LP, is an investor in Breakthrough Energy Ventures. Billionaire climate tech investor Bill Gates, meanwhile, has told Bloomberg that artificial intelligence will, quote, pay for itself when it comes to its associated greenhouse gas emissions, as the technology will help push forward the energy transition. Gates also weighed in on the valuations of big tech companies driven by the AI boom.
The big breakthroughs come when AI teaches you about material science, like, okay, I can make a solar cell without using silicon, or I can grow food very efficiently, in a laboratory using fungi or some other approach. So it's as AI gets into the basic science thing that it goes beyond just kind of a super smart tuning where you save 10% here, 15% there, to helping you with that fundamental design of the green product.
And how concerned should we be about, we're here talking about energy, the extra energy demand that's going to come from the AI boom? Is it worth the extra emissions just for the power for the intellectual power that AI can bring to bear on this?
Yeah. So the additional electric demand, from electric cars as we change that over, or electric heat pumps as we change that over, or steel manufacturing, all of those dwarf even this amazing demand for data centers. Now, there's lots of ways that we're trying to make the AI computations more efficient, so we're not using as much energy. So the exact path of does it end up being, 3% of electric use or 6% of electric use, it's not going to go above 10%. So, yeah, it's got to fit in, it's got to pay the price, and those tech companies are probably as sensitive to wanting to even pay a bit extra to use green energy of any electrical customers in the country. So they'll help push the green technologies forward. They're willing to pay somewhat of a premium to get in and be able to say that it's all done without greenhouse gas emissions.
So you think on balance, AI will, when it comes to emissions, AI will pay for itself?
Absolutely.
Now, speaking of AI, you've obviously been in this industry for a long, long time. You've seen lots of ups and downs in the tech space. Right now, we are seeing, of course, a tidal wave of money going into AI. NVIDIA, for example, recently became the world's most valuable company, albeit briefly. When you look at market caps like this, do you worry that we're seeing bubble valuations?
You know, I'm not a buyer and seller of tech stocks on, like a daily basis or anything. You know, these multiples aren't as high as they were, say, during the internet bubble. And the growth is real. I mean, AI is not pets.com. This is something very, very fundamental. So don't take my view on any particular stock, but the growth potential, there will be some big winners in this AI space, which is why you see all the leading tech companies, including Microsoft, putting tens of billions of dollars into not just the back-end capacity, but re-engineering their applications so that you're far more productive.
Billionaire climate tech investor and Microsoft co-founder, of course, Bill Gates, speaking to Bloomberg. Coming up, EU leaders gather with the hopes of finalising the bloc's new leaders. More on those changing power dynamics next. This is Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. We do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
Welcome back. European Union leaders are meeting as they look to wrap up a deal on the bloc's top jobs after failing to reach agreement last week. Let's get more then from Bloomberg's Oliver Crook, who's been following all the intricacies and horse trading around this situation. First up then, the EU Council meeting, Ollie, since the election, the first one. What do leaders need to get done at this meeting?
So as you allude to, Tom, obviously what they need to get done here, the real deliverable is naming those 3 top jobs, where there's the EU Commission President likely to be filled by Ursula von der Leyen, the EU Council Presidency by Antonio Costa, and then also, of course, a foreign affairs policy going to be filled by the Estonian Prime Minister Kaja Kallas. So those are the 3 main jobs, and you really need to hammer down those 3 main jobs before you get anything else done within the EU, because all the other commissions, everything trickles down from those sort of 3 anchored jobs. What they also need to do is put out their strategic agenda, which is really this document that all these EU leaders need to get together on and agree on, that really sets out the policy priorities for the EU over the next 5 years. In there, you will find some of the familiar topics from Ukraine, defense, security, but of course also the question of competition. And of course, we also have Zelensky in town today, who's going to be meeting with the leaders on the week that the EU and Ukraine have begun the accession talks. That is the negotiation, formal negotiations for Ukraine joining the EU. This is a very long process, but a significant one to begin formally. Big 3 that have come together to name those top jobs, but she can make a lot of trouble from the sidelines. Macron, for one, his priorities will certainly be falling down the agenda. Joint debt, that was one of the things that he was really concerned with, and also the question of whether a right or a left government comes in France. Neither of those are great for the EU.
Oliver Crook on the ground for us in Brussels and the changing political dynamics in the EU and the implications as well. Ollie, thank you very much indeed. Now, with a week until the UK election, we're going to look ahead to how that vote and that election is shaping up. This time next week, July the 4th. We'll get the details and the preview. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Good morning and welcome to Bloomberg UK. I'm Tom Mackenzie in London. Now, the UK Prime Minister Rishi Sunak and Labour leader Keir Starmer have gone head-to-head in their final TV debate before next week's election. Starmer accused Sunak of being out of touch and attacked the Conservatives' record in government, while Sunak hit back at Starmer on taxes and migration.
And higher welfare. That's what Keir Starmer will do. If you want lower taxes and lower welfare, that's what I will do.
And I just want to address this point.
You opposed it when I announced it. You literally opposed it.
If you listen to people in the audience across the country more often, you might not be quite so out of touch.
Could we get a better trading deal with Europe?
You know what? You might be able to. But do you know what the price of it will be? It will be free movement of people. And that's what Keir Starmer's not being straight with you about.
Okay, let's bring in Bloomberg's EMEA News Director, Ros Matheson, and Bloomberg's Adam Blenford. Adam, I want to start with you on what the key takeaways were from this debate. There was a lot riding on this, arguably for the Prime Minister, Rishi Sunak, given the poll gap. Did the needle move? What stood out to you from this debate?
You're right, Tom. Sunak, the Prime Minister, he needed quite a convincing performance to try and overturn what's been a very stubborn and pretty wide poll deficit. You know, the whole 4 or 5 week election campaign, the Conservatives have been trailing about 20 percentage points behind Labour. So with 1 week to go before election day, really Sunak needed to land some kind of knockout blow on Starmer. He came out really quite pugnacious. He was quite punchy. His attack lines were well rehearsed. He looked like he sort of believed what he was saying. But the snap polls at the end suggested that it hadn't really made that kind of breakthrough that he was needed. One put them level pegging at 50-50. That isn't going to move the needle in the same way that he might need. And one a little later on in the evening suggested actually that Starmer won the debate.
And Ros, we are just a week away from this vote. July the 4th, we're all going to be going to the polls, at least British nationals. We'll see what the turnout is actually going to be like and whether or not that's going to be suppressed if people are really engaged in this election. Taxes came up again as an attack line for the Conservatives, for Rishi Sunak. Is that landing at all with the electorate? How potent is that as a tool in the next, 7 days that we have?
Well, as Adam was saying, you saw Sunak really come hard on taxes again in the debate last night, saying to voters, watch out, you're going to surrender your finances, your family finances to Labour, not just on taxes but also on welfare. So basically, can you trust Labour with your finances? And he said that throughout the campaign and again in the debate last night. The question is, which voters is that aimed at? Is that aimed at Labour voters? Is it aimed at the Tory voters who are a bit frustrated after the many years of Tory leadership, particularly the last few years of chaos? And is he trying to peel those voters back to the Tory base? Is he also trying to stop voters leaching to the far right, to Nigel Farage in all of this? So is that message really geared at Labour voters, more about shoring up his own base going into the vote?
How damaging, Adam, do you think the whole Gamblegate scandal has been? This is members of the Conservative Party allegedly placing bets on the timing of the election. To what extent has that been another smear on this campaign?
Well, I certainly saw some research that suggested this was the news story that had cut through the most during the 5 weeks of the campaign, bookended by Rishi Sunak leaving the D-Day commemorations early, which was a few weeks ago and was the precursor to one or two of the other TV debates. So Sunak's been battling these sort of headlines throughout the campaign, and it was noticeable last night, as we said. He came out kind of punching, as Ros was saying there, with some effective lines. A week or so ago, he was almost apologetic. There was a question and answer session, not a head-to-head, but he was almost looking like the weight of the world was on his shoulders. Yesterday it was a slightly different Rishi Sunak, but as Ros was saying, he's trying to appeal to a type of voter, and Keir Starmer, who would be the Prime Minister next week if Labour wins the election, was projecting a really quite different tone and talking about quite different things.
Okay, and we'll get on to the other parties shortly, but I just want to get to the polling, Ros, with you, because we always have to provide the caveat. Yes, the polls have consistently showed about a 20-point lead for the Labour Party, but they are just polls. The vote will happen, of course, on July the 4th. We were speaking to Anand Menon, a keen watcher, of course, an expert on the UK political scene. He said even if you had the worst polling results, it would still be a significant victory for the Labour Party. But he did also say that there's about by some estimates, 5 million undecided voters still. Is there a concern for Labour that people will sit out this election and maybe the undecideds could turn to the Conservative Party? Maybe they're not telling the pollsters what they really feel.
Well, there is that question generally about polling, about how much people tell you in the minute in the poll and how much what they actually do when they go to vote on the day. But also, you mentioned turnout, and that's going to be crucial. We can see the messaging coming from Labor is let's not be too complacent. Now, the polling does show they're on course for victory, possibly even a super majority. But, you know, they don't want Labor voters sitting at home and saying, I don't need to go and vote because this is locked in. And equally, Sunak needs the Tory voters to come out and vote for him and not to vote for Nigel Farage at the same time. And so you can see really it's going to be a question about motivating people to come out and vote. And that's really what Labor seems to be concerned about, is this polling shows such a large margin for victory. Does that deter people in the end from bothering on the day?
Adam, for a lot of our viewers based here in the City of London, there will be a competition within their constituencies between the Lib Dems and the Conservatives. The Lib Dems trying to make a play for Southern England. Talk to us about the messaging there and what the Lib Dem picture could look like.
Absolutely. This is one of the intricacies, both of the UK electoral system, where it's a winner-takes-all system in any given constituency. You just have to get the most votes and you win the seat. But the Liberal Democrats, of course, were in government with the Conservatives from 2010 to 2015, and then were kind of wiped out electorally as a result. They've gradually rebuilt themselves as a very centrist party, perhaps even more to the centre than the soft left Labour. And they are challenging the Conservatives in many of those traditionally conservative strongholds, where it's very difficult for the Conservatives to tread the line between appealing to the Nigel Farages of the world that Ros was talking about, taking a tough line on immigration, while also appealing to what was traditionally known as sort of the One Nation Tories, the shires of middle and rural England, people with small c conservative values who have traditionally voted for the Conservatives, but were not in. It's not been part of the mainstream conversation for a lot of this campaign. But Brexit, for example, divided the Conservative Party down the middle between those in southern southwest England who didn't necessarily back Brexit and some elsewhere who voted for them who did.
OK, so we watched to see how the story evolves for the Lib Dems. The Green Party, and Guy Johnson spoke to the head of the Green Party, and both Labour and the Conservatives have been critiqued, of course, by the IFS around their manifestos and not being transparent. The IFS would say around revenue raise that's needed. And, of course, Labour has said they're not going to be raising some of the main tax pillars or not pulling those levers. The Greens, though, say they would raise taxes. Take a listen.
So we would seek to raise taxes on those with the broadest shoulders to increase the funding on day-to-day spending. And then in terms of the investment that's needed in the transition to a green economy, the capital investment in things like public transport, insulating our homes, renewable energy, we would be willing to do some borrowing for that, because that's about borrowing for investing in the future. And the economic opportunities that come with that are huge for all of us, and actually the costs of not acting on the climate crisis are much bigger than the costs of acting.
So the Green Party co-leader speaking to Guy Johnson there. Ros, I bring you in on this. If the Green Party have a decent election, is there a picture that we could see unfolding where they play a role in pressuring any future Labour government, if indeed that's what we get, into a higher tax regime? What kind of role do you see the Greens playing?
Well, it's interesting because there actually hasn't been a lot of conversation about the Greens really in this election. It's been the Tories, Labour, Lib Dem, and also, of course, Nigel Farage. But the Greens are really out on a limb on this one because the Tories have been very clear that they're walking back a lot of their promises around net zero. They're pushing timeframes back and so on. And even Labour is being very careful about that because the messaging really that is resonating with voters is right now they know people are doing it tough. There's a cost of living crisis, they say, in the UK, and people are worried about the very short term. And so if you go to voters and talk about the long term and they need to think about that, right now that's less of a priority. And so the Greens are kind of pushing against that door a bit with their campaigning. However, they are sticking to their guns on it, and they're saying we realise we would need to raise taxes to do it. So interestingly, if Labor does get in, you can see the Greens playing a role, as you say, holding Labor to account a bit on that, because Keir Starmer's been, pushed on the tax issue. No, I'm not going to raise taxes. No, taxes won't go up. The Greens might say that they need to do that to some extent to adhere to some of these net zero, pledges, and that's really a core issue for Labor.
So from the threat to the right then, to the Conservative Party, Adam, and you talked about Nigel Farage, the leader now of Reform UK. Where does Reform stand at this point as we count down to next week?
Reform has successfully managed to attract the attention of the Conservative Party. You know, the Conservatives and Labour are the two heavyweights here, and their conversation has been dragged or centred very much on the idea of lower taxes and not raising taxes, which is why the Greens that you were just talking about there are finding themselves as this sort of lone voice on this. And immigration, you know, Farage and Reform have prioritised the issue of immigration, which has become a touchstone for the Conservatives. All through the last year or so, Sunak has been standing and making speeches with the slogan "Stop the boats," trying to stop the small boat arrivals across the English Channel, and talking up the Rwanda deportation scheme, which hasn't yet really managed to send anybody out of the UK. So Reform is in some ways setting the conversation. The Conservatives are in their camp. The question about Reform is, can they turn that into electoral success? Nigel Farage is trying to stand, I think it's for the 8th time as an MP, hasn't managed to be elected before. He's got a good chance. Clacton, where he's standing, has previously elected an MP from the precursor of the Reform Party. So, you know, he's got a chance. It'll be very interesting. The Greens and Reform are both penalised by the electoral system, which, if they get 10 to 15% of the vote, won't return them many MPs, and that's the limitation for them.
The post versus
that's the issue for them in terms of pressure. Yeah.
Adam, thank you very much indeed. Bloomberg's Ros Matheson, of course, and Adam Blenford breaking down where we stand in terms of the run-up, of course, to that vote here in the UK on July the 4th. Thank you both for the analysis. We're going to be speaking, by the way, to author and journalist Will Hutton in the next few minutes, getting his view on the election and what he believes it will take to, quote, rebuild Britain. That conversation is next. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like, that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back. Now, Brexit and economic growth, just some of the contentious issues in the general election, which, of course, is now just 1 week away. For more on this, let's bring in Will Hutton, journalist and the author of This Time, No Mistakes, How to Remake Britain. You can see the book there on your screen. Will, thank you very much for joining us. In the first 100 days of the next administration, whoever's in government, what should the policy priorities be, Will?
Investment. Britain's got a productivity crisis. It's got a growth crisis. It's got a living standards crisis. And we've got to lift levels of investment decisively. And I think in the first 100 days, you will see measures to start that long road back. So for me, there's three institutions that Labour will inherit, which can be turbocharged and without raising taxes to kind of try and lift the growth rate. One is the Pension Protection Fund, which could be doubled, trebled in size, and it could provide lines of investment for, crucially, the UK Infrastructure Bank, which could lend very much more than it's currently doing, and the British Business Bank. And of course, you've got the Catapult network of innovation centres, which are kind of undernourished and underfunded and they need really turbo boosting. You go for those four things, and you can start to get growth moving, in my judgment. And I think they will go big time for infrastructure. And I think one of the first things you'll see in the first 100 days will be the establishment of this kind of infrastructure commission. So, that's kind of one area I'm looking for. A second area is plainly energy, net zero. I think they will start to bring the legislation forward for Great British Energy and begin thinking about how they're going to kind of decarbonise the grid and decarbonise our economy at a more rapid rate. And they'll have to do something on NHS waiting lists. So, in the first 100 days, I'm looking for action on all those three things, culminating in a budget in September in which I think there'll be increased borrowing for public investment. So there you are. That's my kind of start at 10.
Will, on the front of your book, you have a quote from Keir Starmer, potentially our next Prime Minister, saying, "A brilliant book, read it if you haven't already." I put the potential there. We know what the polls are suggesting, but it, of course, is not a done deal until the votes come through. So we're not going to make too many assumptions. But there has been a critique of this Labour Party that they have not been bold enough, whether on issues like pushing through with the wealth tax or getting closer to the EU. But you outline a pretty bold picture there, Will. You have your ear to the ground. You talk to members of the Labour Party. Do you expect more boldness? Is there a concern that they're not going to push through on some of these issues to really get to that growth? 2.5% is what Keir Starmer suggested. That seems pretty fanciful at this stage.
I think they will get 2.5% growth, and I think they will pull levers pretty aggressively to get there. Yeah, Keir Starmer was very enthusiastic about my book at the launch of the book. He has read it, and tells me he wants to take the ideas forward in it. So make that what you will. I think that of course, they're constrained. I mean, they've ruled out all these tax increases in the three big taxes. I would expect them to increase capital gains tax, have a major overhaul of capital gains tax. I'd expect them to have an overhaul of inheritance tax, and I would expect them to have a review of the system of residential property taxation in the UK, looking to get kind of more money from all those three areas. But they can do a lot without raising taxes. One of Rishi Sunak's kind of bequests, one of his bequests to,
Well, no, I was going to ask, because those are some of the levers in terms of raising revenue, but you also suggest in your book that you should look at more borrowing, more public borrowing. That surely will collides with market reality. We saw that with Liz Truss.
Well, there's two things about that. I mean, the FT carried a story last week showing how asset managers and asset owners would be prepared to kind of buy British debt if it was understood it was to support public investment. And two, as Napoleon said, give me lucky generals. I mean, at the moment, if you look at, if you're an international investor, you want to hold French debt, German debt, Italian debt, Spanish debt, or British debt. And so there comes a, we're going to look a bit of a safe haven, I think, as political turmoil breaks over France. So I think, and there is scope. The key is that you've got a tax base to support servicing your debt, and secondly, you're actually spending money on public investment. I mean, infrastructure, R&D, training, leveling up. These are transport links, the port system, which is kind of falling apart. I mean, everyone understands the need for infrastructure investment. And actually, Britain has got quite an interesting institutional framework to do it. The UK Infrastructure Bank, which has only lent £3 billion over the last 3 years, could lend £10 billion a year. And it wouldn't lend on its own behalf. It would guarantee the lending of other people. So it would all be off balance sheet and wouldn't score as public debt.
Well, what is the role of the City of London in this diagnosis around the need for more investment?
Big time. I mean, I think that, the big insurance companies have been dancing around, kind of creating kind of a pooled private sector wealth fund to match the public sector wealth fund. Nothing has happened so far, despite the Mansion House declaration of last July. And Jeremy Hunt wasn't very vigorous Chancellor Jeremy Hunt wasn't very vigorous in pushing this. There's a lot of receptivity for that. If you ask around, you will find that the kind of leaders of the big four insurance companies, some of the big asset management houses are really interested in actually creating pooled private sector investment vehicles to match a public sector wealth fund, and the two would act kind of in a symbiotic relationship, rather as happens actually to a degree in Canada. So, you've got that play to stimulate investment, and you are talking, run rates there of 10 to 20 billion a year. You've got the UK Infrastructure Bank. You've also got the Pension Protection Fund. The Pension Protection Fund's only got 35 billion in it at the minute. But if you really allowed it to kind of treble in size, so it's £100 billion fund, it's been very smart in the way it's invested. It could support the British Business Bank and the UK Infrastructure Bank even more without raising any taxes. You have got the institutions to support growth.
Apart from maybe capital gains tax. So that was interesting. Will Hutton, really fascinating, the diagnosis of some of the issues facing this UK economy and what may be to expect in the first 100 days, if indeed you get a Labour administration. Journalist and, of course, an author of This Time, No Mistakes, How to Remake Britain. Plenty more coming up. Stay with us. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Authorities.
Could face bigger challenges next.
It was going to keep bringing the World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars. Only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg understands that Australian bank and asset manager Macquarie made about $1.2 billion by selling off a 48% stake in Thames Water before 2018. The heavily indebted British water company is currently on the verge of collapse. Bloomberg's Rachel Morrison has the details. Rachel, what do we know?
Well, what's really interesting about this story is we sort of know for the first time that Macquarie investors made a 2.5 times return on their original investment in Thames Water. And really, the people who bought from them now have that investment classified as worthless. So it's a really interesting sort of deep dive into what was happening at the time at Thames Water, and a kind of story that tells us how we got to partly where we are today with Thames Water in big trouble.
Okay, Rachel Morrison, thank you very much indeed on the update there in terms of Macquarie pushing through with some profit, at least from 2018, in terms of Thames Water, as we continue to watch the plight, of course, of that company. Across the European Stock 600, you're currently seeing modest losses of about 0.1%. The mood has changed. US futures, S&P E-minis, also pointing lower by 0.2%. Be sure to subscribe to Bloomberg's In the City podcast, by the way, with Francine Lacroix alongside hosts Allegra Stratton, Dave Merritt. This week's episode features the CEO of electronics retailer Currys. Bloomberg Brief is next. This is Bloomberg.
Julie Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now.
What have you learned with the dynamic move of the interest rates? Do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Julie Swinehart took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park, and that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
Good morning from our global headquarters in New York. I'm Manus Graney with Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
Day two of unease in the global bond market as investors await the latest U.S. GDP and jobless data. And an AI letdown. Micron drags chip stocks lower after its forecast failed to meet lofty expectations. And Searchlight's Oliver Harmon joins us later this hour on the looming maturity of debt. Good morning, Manus. Great to be back with you.
Danny, very good morning. Great to have you back with us. Is it time to turn around? Is it time to pause, rotate, and defend? That is the question that is coming into some people's minds. Piper Sanders say the engine warning lights are on. Now, look, you can hardly call a bit of a drop this morning in NVIDIA a serious warning light, but it's down 1 1/8%. Jensen Huang defends the moat at the AGM. Yes, see, Micron is where the pain trade is this morning. It drops not so much on the AI narrative in their results, but on good old-fashioned, let's say, traditional PC market. That's where the warning lights are there. UBS says it's time to right-size your tech exposure. So both those stocks taking a little bit of a chip, excuse the pun, out of the futures this morning. When it comes to the bond market, the 5-year auction did fine. The bid-to-cover ratio wasn't so bad, but it is still 1 standard deviation below the 1-year average. That is not indigestion. That's simply questioning where we are. Overall, we're back to flat. Yes, the global bond tail is wagging in Australia and in Japan. You've got hotter inflation in Japan on the expectations, but right now we're counting down to the 7-year bond auction today, $44 billion and change. Dollar yen, it made that 38-year high for dollar, low for yen, reigniting the debate about when we will get a rate hike from Japan. Adam Posen was with us yesterday, Danny, talking about managing the decline of the yen and to fight back with rates. Use the rates and use that market, not throwing peanuts at the intervention gallery. Good morning, Danny.
Good morning, man. It's got to be honest, I'm really distracted by the bottom of the screen right now. Micron down 6% on an earnings that simply met forecasts instead of beating them. Perhaps it is a warning sign for these AI stocks where you've had very full positioning and a nervous market, maybe weaker hands. But this is the thing, as you mentioned, it's really only met forecasts because of its traditional business. About 2 quarters ago, the same exact set of results for Micron, where it was the PCs that disappointed and the stock sell off precipitously, and we forgot about it. And the AI rally ensued. So we'll see if we have that short-term memory yet again this time.
Yeah, but we were in an evangelist dream in terms of AI, 6 months ago, a year ago. There's a couple of notes have come into the box saying, is this an AI canary in the coal mine? They are meeting demand now. And this is what Sophie Lund said yesterday from Hargreaves Lansdown, which is, it is not the now that we're worried about, it's 2025. And as you said, when we sat down and we were debating the Micron situation, Danny was much more aggressive on the downside of the note that I have from Radio Free. But it was, the demand is there right now. It's what happens going into 2025. And there are serious doubts about that.
Right. To be fair, the only issue I had with what you were talking about was that someone called NVIDIA cheap. I just don't see how you can call it stock.
Very, very upset at 3 a.m. this morning.
It trades 48 times sales. I just don't see how anyone can call it cheap.
Year 2000, history rhymes. It doesn't necessarily repeat itself at times. It's good to have you back. Now I've got somebody to argue with.
No longer arguments with yourself. That's good. That's healthier.
I do that with the team in the break. Okay, good to have you back on set. Let's get back to basics because we're talking about investors and what they're expecting. It is about the latest GDP numbers, the jobless claims, the data, the new home inventories. They stood at the highest level in over a decade since the bursting of the housing bubble. Another market at risk that could drag on the U.S. economy in the second half of the year. This comes as the numbers for the GDP hit the tape at 8:30 a.m. Our guest this morning is Abigail Watch, U.S. economist for UBS. Good to have you with us. You're also concerned about a slowdown going into the second half. What scale of slowdown, and does that play through to the disinflation narrative? Good morning, Abigail.
Good morning. Thank you so much for having me join today. Yeah, as you say, I think we're tracking currently for the first half of 2024, we're currently tracking that GDP will come in below 2%. And if we think about the kind of boomy kind of 3.1% growth that we saw in the US economy through 2023, we think that is a fairly marked slowing. And going into the second half of the year, we're also expecting the economy to continue to slow. We think that over the course of the year, the economy will expand below 1.5%. So we think this is a fair slowing. There's a couple of drivers there. The first is that we think consumption will begin to slow. We also think that fiscal stimulus was a big part of the story in 2023, and we think it will be less of a boost for growth through this year. And then finally, we think business investment will remain relatively subdued. In particular, we think that there's some scope that policy uncertainty around the election in the third quarter could hold back some investment from the business sector as well.
So Abigail, I mean, there have been some Fed officials that have started to kind of sound like you. Mary Daly is perhaps one who said that, maybe Lisa Cook too. Yet Michelle Bowman now for 2 days in a row has beat the hawkish drum. Yesterday she was speaking in London at a closed-door event and reiterated the line that it wasn't time to cut rates, that inflation was still a problem. Given you see a slowdown, are you concerned that Fed officials are setting their policy to yesterday's data and risk a policy mistake by not cutting soon enough?
Yeah, so it is interesting. We have heard kind of fairly mixed comments from various FOMC members since the June meeting. Generally, at the June press conference, Chair Powell reiterated the strength of the economy and the kind of strength of the labor market in particular. And one of the things that kind of surprised us about the June meeting was that some of the language in the statement didn't acknowledge some of the slowing that we've seen. You know, Q1 GDP came in at 1.3%. We're expecting that to revise up a touch to 1.4% in the data later today. But ultimately, we do think you are seeing that slowing, and it is a fair question, the extent to which that is kind of feeding into the narrative from the FOMC.
Well, one narrative that we're going to debate probably for the whole 60 minutes tomorrow morning when we go forward 24 hours is the debate between President Biden and former President Trump. Now, we had Adam Posen with us yesterday. He talked about the risk, the material risk of a shift of immigrants out of the country, anywhere between 1.3 to 7.5 million immigrants removed from the system over the next 3 years, and the prospect of much more aggressive tariff regime. We don't know what will be delivered. Tonight, we're going to hopefully get a little bit more intimation about where Trump stands on some of these things. But that prospect delivers stagflation, unabated stagflation. Is that a mounting worry for the UBS economics team?
Yeah, so in our economic outlook that we published last year in November, you know, we acknowledged, you know, the risks around the election. We see kind of 3 key areas of policy that, you know, we're watching closely. The first would be fiscal policy, the expiration of a great number of provisions for individual income tax policies, you know, expiring at the end of 2025. The second would be around that immigration element. You know, the increase in immigration through 2023 was a big part of the labor market rebalancing that we've seen, and the ability for us to continue to see kind of waning wage pressures and some of that kind of disinflation and that inflation progress through 2023. So obviously that's one of the other elements that we'll be looking out for. And then I think as well on tariffs, obviously that is another element of the policy that we'll be looking out for. And in particular, I guess, thinking about some of the possible kind of inflationary impacts and the impacts on the growth inflation mix in the US economy as a result of those.
Abigail, you put that all together, and it is a 2025 that is just wholly unknown. You look already what's happening around the world. Inflation surprises from both Australia and Canada in just this week alone. Do you think that's instructive at all for thinking about 2025, that the threat of moving down in inflation, of getting rates back to normal, will have this bumpy road where we need to rethink things?
So our expectations on the inflation side are that we continue to see that inflation progress. I mean, we did see obviously a better inflation report on last week in May's CPI release. You know, the headline was certainly more encouraging. Obviously, the rent component of the index was still a little bit stickier than we'd perhaps like, but our expectation is that we do see progress on inflation continuing, and a big part of that is our expectation that we think the economy will continue to slow. And as we see that slowing and the continued kind of slowing in the labor market and the loosening in the labor market, we do think that that will lead to kind of core PC inflation coming in at around 2.1% by the end of 2025. So that's our base case assumption in terms of the outlook for inflation.
Okay, Abigail, really appreciate your thoughts this morning. Great to get them. Abigail Watt of UBS. Okay, Manis, let's get to some of the other top stories that are trending on the terminal this morning. An era of big paychecks for China's financial elite is ending. The nation's largest financial conglomerates have asked senior staff to forgo deferred bonuses, and some employees are also being pressured to return excess pay from previous years.
SoftBank's Vision Fund 2 is investing in Perplexity AI. $3 billion valuation. The deal is Masayoshi Son's latest bet on the sector that he deems as crucial to securing his legacy. Perplexity, which is a US startup, has distinguished itself from other AI chatbots by providing more real-time information.
Shares of H&M getting crushed this morning. They are plunging. The fast fashion retailer reported disappointing earnings and a slump in June sales. New CEO Daniel Ever is under pressure to accelerate H&M's turnaround with intensifying competition from Zara owner Inditex and China Shein. Manis, those shares down 13%.
Yeah, when will Shein come with their IPO? Coming up in the show, Micron extends its post-earnings decline after failing to meet those sky-high expectations. We look at the impact on the broader industry.
And later this hour, we're going to be speaking to Oliver Hardman on his outlook for deals in the second half of the year here on Bloomberg Brief.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Watching Bloomberg Brief, Danny Berger and Manis Cranny in New York. Micron failed to meet Wall Street's sky-high expectations for the chip maker. The sell-off down more than 5.5%, but it did rally 67% this year heading into the earnings report. Investors had been expecting a bigger payoff from the AI mania that has swept markets. Joining us now is Bloomberg's Henry Wren. Henry, it is remarkable to see a stock punished for merely meeting expectations. So did we just run up too far in the preceding days and year into these earnings?
Yeah, indeed. As you pointed out, that the stock has already risen by 67% into earnings. So this post-earnings expectations has been probably too high. So the stock reaction is probably not totally unexpected. As we see, the company beat consensus estimates in terms of this quarter's sales guidance at the midpoint, but it fails to beat the most bullish estimates, and that has been seen as a letdown by the bulls. The point of weakness is probably doesn't come from the new demand, so AI data center, but most likely from the more traditional markets, so being PCs and smartphones.
So this is when the market really begins to worry about their capex. It's going to be in the mid 30% range if you've got the traditional business, which are the pillars that support the innovation. Is there any way, and Danny and I are at loggerheads over this, as to whether the Micron reading on AI can give us any kind of a broader read on the supply chain or on the state of play in AI? Certainly not if you listened to Jensen Huang yesterday at the AGM, but give us your take.
Yeah, indeed. So Micron's post-earnings reaction definitely serves as a cautionary tale for other AI chip stocks, which has probably run a bit too high in terms of the stock price, but as well as analyst expectations. And that's exactly what we've been seeing in pre-market trading for now. NVIDIA has been trading lower, Qualcomm as well as the NASDAQ futures. But in terms of the supply chain, it could be another story that we've been seeing. European chip equipment makers have been trading higher, especially for ASML, ASMI, and others in Europe. And these companies are the providers of cutting-edge chip equipment that are essential when it comes to making those memory chips, those high bandwidth memory that will go into the AI chip, AI computing for NVIDIA, for others. So these are the stocks to watch, and they have been trading higher in Europe.
Well, let me play devil's advocate here, Henry. Couldn't I just say what we're seeing from Micron is simply about their PC business? It's a slowdown in its traditional core business, and it shouldn't have any impact for NVIDIA.
So for now, what actually we've been seeing is the traditional markets, including the PC and smartphones, they have been going through painful downturn in 2023, and they have been stabilizing for now, but they are still, when it comes to recovery, that has been slow, and that has been dragging the memory chip demand. But for the AI demand, that has still been showing no signs of slowdown. So in terms of the AI read across, in terms of the AI supply chain, that's still bullish signals, although that you can argue that they don't beat the most bullish expectations, but still that's ahead of expectations at the midpoint. So there's actually not so much bearish signals that you can read through if you are an NVIDIA investor.
Okay, well, we're on tenterhooks to see how the rest of the day goes, but certainly Micron is taking a bruising at the start of trade in the pre-market. Henry, thank you very much. Henry Wren on the very latest tech rumbles. Now, another company with lofty expectations, it's SpaceX's tender offer. It's said to value Elon Musk's company at a record $210 billion. Now, this is the world's second most valuable startup, and it was last valued at $180 billion. That was in December. The world has moved on. Matt Bloxham is with us. I mean, look, it's an Elon Musk company. It had a valuation the same as Verizon and General Electric. That was back in December. That valuation has increased. What has materially changed? Is it faith in Elon Musk, which I say probably is more questioned in the past 6 months, or is it the business model of SpaceX?
I think it's more the business model of SpaceX, to be honest. And I think, since that December valuation, the company's gone from strength to strength. That they have a number of strings to their bow. They've kind of got the launch business, and then they've got the Starlink satellite business. We've seen that the Starlink satellite business is hugely important, both from a kind of commercial perspective, but from a geopolitical perspective too. And the launch business is by far and away the leading launch business in the world, and they've got these incredibly good contracts with NASA, and we've seen some of their competitors, fumble a bit. There's these ongoing issues with Boeing Starliner that's currently docked on the International Space Station. SpaceX's equivalent, Crew Dragon, has been going ahead, relatively smoothly, and obviously, as we're seeing on the screen, they're now moving into their Starship launches, which got off to a bit of a tricky start, but the last launch in June was pretty successful, and they're planning another one in July. So I think as a business, it's in a really strong position in the space segment, and I think people's interest in space is just growing over time.
What about its Starlink business, Matt? How has that been contributing to the revenue of SpaceX and its growth that we've seen with its valuation?
Yeah, it's a good question. Obviously, the amount of information we actually get about the revenue mix is limited. Certainly, we're hearing lots of encouraging noises from SpaceX itself and from the industry about adoption of Starlink, and certainly in terms of forward projection. I mean, I think in rough terms, I think people think SpaceX generated about $9 billion of revenue last year. A few billion of that coming from the launch business. I think going forward, the current expectations suggesting around $15 billion of revenue for SpaceX in 2024, with most of that growth coming from the Starlink business. And certainly Elon Musk, when he talks about the future growth opportunity for SpaceX, he definitely puts the emphasis on that Starlink business as being the big growth engine. Clearly they can grow more in the launch business, but there's a clearer cap on how much more they can get out of the launch business. So Starlink is really central to the mid to long-term growth expectations for this company.
Matt, thank you so much for that. That is Bloomberg Intelligence's Matt Bloxham. Okay, coming up, your Rolexes may be getting pricier. Manus is currently checking his watch to see
it's
how
not a Rolex. It's vintage, but it's not a Rolex.
We'll have
like
more
me.
on...
It's like me, vintage.
Get out of here. We'll have more on not Manus's watch, but Rolexes.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
It's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond. Bloomberg Brief. It's a bit of a shock. She's Danny Berger, and I'm Menace Crenny. Reunited. Let's get you up to speed with your front pages. This is what we've got for you that are making headlines around the world. The FT, we lead with that. The French far-right leader, Jordan Bardella, vows a cultural battle against Islamicism. Also demands that the EU budget rebate. He says that he's confident of winning an outright majority in the legislative elections.
Which, of course, would lead to cohabitation. Next up on the AP...
That's us.
That's us, yeah, cohabitating. Trump and Biden are going to be facing off for the first time since the 2020 debate. You have the situation, Menace, where both candidates are trying to shape the narrative, get ahead of this. I love this. Anne-Marie sent this along. Most viewers, per a CBS poll, want to learn about plans and policies. Good luck to them.
I mean, that kind of frightens me that, you know, there's a belief that watching these debates, you're really going to get an insight into policy. It's a favorite theme of our viewers. We know that. You just need to go to sorry, not Richgo. You need to go to Poshco on your terminal, and you find out what Rolexes are for sale. But the top-selling Rolex seller in the UK says there is pressure, although things have settled a little bit, is what they would say. We're talking, of course, about watches of Switzerland, and there's the famous Pepsi. Now, the question is, Danny, do you want a Pepsi or do you want a Batman?
So if I care about
She cares.
money, then you want a Pepsi. You want a Pepsi because, as Menace flagged to me this morning, Pepsi's actually been gaining in value, while the Batman, which was that other black and blue one, has been falling in value.
Yeah, your Pepsi's up by 4%, your Batman is down by 10%, and if you're vintage like me, you go for something else and something a little bit more subtle.
Well, here's the bad news. Because the price of gold has been going up with the rally we've seen lately, Rolex has actually hiked their prices, only by 4% in the UK, but it's something, so...
Still, the monster part of their business for Watches of Switzerland is the second-hand market, and that's where you go on the list. You've got to have spent a certain amount of money in a Rolex shop before they will actually...
Are you speaking from experience?
Let's put it this way. I'm not on the list. Let's just put it that way. I'm vicariously living on other people's lists in Rolex shops around the world.
But Rolexes are out anyway, so you don't need
Are they?
one. It's cool to have like a plastic swatch or something.
Vintage is in.
Vintage
We'll be
is
back.
in. You heard it here first.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, the electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
From our global headquarters in New York, I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
It's day 2 of the unease in the global bond market. Investors await the latest US GDP and jobless claims data. An AI letdown. Micron drags chip stocks lower after its forecast failed to meet those lofty expectations. And Searchlight's Oliver Harman joins us around the desk. We talk looming maturity wall of debt.
Before we get to that, Manus, let's quickly whip through these markets because it is a market shaken a little bit by Micron. S&P 500 futures down 0.1%. Micron merely meets expectations. And for this market, that is enough to punish it, down more than 6% in the pre-market trade. But can it bounce back? JP Morgan says take any opportunity of weakness to buy the dip. U.S. 10-year yields little changed, maybe slightly higher. It has been a global bond sell-off kicked off by hotter CPI in both Australia and Canada. Meanwhile, the dollar-yen, that starts to recover. Yen stronger versus the dollar by 0.2%. It had been around 161. We go down to 160 after reaching its weakest level versus the euro on record and the weakest level versus the dollar in over 30 years. Manus.
Yeah, and that is about managing the decline, according to Adam Posen. And that was an interesting conversation yesterday. Instead of throwing peanuts at the defense gallery of intervention, use your rates market. But on the Micron, just sort of reflecting on what we chatted about through this morning, the Micron piece is probably a little bit more ominous for the traditional set of chip producers out there because it is their traditional business. I know we have this angst between the two of us about what it means for AI. It's good to have angst on a show at 5:30 a.m.
It's the market.
That's what makes a bid and an offer.
Yeah, exactly.
I'm offered all the way.
I don't know. I just think it shows that
She still bid.
But I do think it shows that there are some weak hands in this market. The fact that these stocks can sell off so easily.
Yep. But let's see how it plays out for the rest of the day.
Well, from public markets to private markets, let's turn there where Searchlight Capital founding partner Oliver Harman is saying that staying optimistic that the market will pick back up after years of slower deals. Yet there is something else that could create opportunity. He says we anticipate the greatest source of deals in the market coming from when the wall of debt maturities comes due. Oliver joins us now. Oliver, thank you so much for coming in the studio. It is great to see you this morning.
Thank you. Good morning.
So I know you see a lot of opportunities coming from this maturity wall, but I want to know about the other side of things. For those that need to refinance into higher rates, talk about the scale of distress and trouble that is potentially brewing for those companies.
Well, I mean, potentially there's hundreds of billions of debt that's coming up for refinancing over the next 3 years. A lot of that is, we know there were so many acquisitions made in the 2017, 18, 19 period, at high valuation levels, but also very low interest rates. So people really were able to take on a lot of leverage to drive equity returns. And of course, it always feels scary when you're sitting as an equity holder and there's a lot of debt coming due, and you say, wow, maybe I bought this company for 10 times EBITDA, and maybe I borrowed 6 times EBITDA to fund it and put in 4 times of equity. And now I can only afford to borrow 4 times. So it's kind of scary. What do you do? And I think that's related to the corporate world, but also to people's personal lives, whether it's a credit card debt or a mortgage.
So true. Okay, so when we get to that point, right, and everyone's dealing with this kind of scary atmosphere, we've been talking a lot about how the idea of there's this mismatch between buyers and sellers, that buyers want something lower, sellers aren't willing to sell at those levels.
Yeah.
Is this what brings the gap down?
It does help bring it down a little bit because you have to act. So if you're staring at that example that I just gave, and you can only afford to maybe borrow 4 times, what are you going to do? You're going to have to take action. And either you're going to sell assets. So, we are starting to see some deals where companies are selling assets, and they use the proceeds to reduce their debt, and then they can refinance the remainder. Or you raise equity. Obviously, you can always raise equity through an IPO. We know that's challenging. So there's other equity offerings that are possible, which we can talk about. And last, there's also going to drive some mergers because it might make sense to merge with a competitor, take the combined synergies of the combined company, and then refinance the combined debt at a more attractive basis.
Well, what is gaining traction at the moment? And I'm going to bring you some headlines from the Bank of England. We can talk about these. These are literally just crossing the Bloomberg terminal as we speak right now, which is that more private equities are struggling. The Bank of England warns that private equity exposed to tighter financing, as Danny has said. So again, this is their report that they produced. They talk about the stability report. It's the financial stability report. Would you agree that we are in a struggling mode and that we may see some king's crowns fall in that struggle? Are we going to see some?
Yeah, each deal is individual, right? So each firm is going to have deals falling into lots of different categories. And of course, there's the companies who are struggling to refinance their debt because they're underperforming their initial business plan. And those companies will have a harder time. They will obviously have to restructure, and the underlying equity owners will probably have to take some form of a haircut.
Right.
We've actually done some really interesting deals recently in good businesses that are still facing the refinancing wall because they need cash flow to reinvest in their business to grow. So in that example that I gave, you might be able to actually refinance be able to afford refinancing at 6 times, but you don't want to because your business is growing and you want to reinvest your cash flow in the business. And those can be really interesting opportunities where you're helping a business right-size its capital structure and effectively maintain the flexibility to keep growing, either organically or through M&A.
I mean, it is interesting, this kind of confluence of factors, because on one hand, you have maybe some companies that are exposed to these tighter financial conditions and are kind of struggling, yet there is a lot of money in private debt right now chasing assets. And you get this weird thing happening where some of these companies are doing strange restructurings. Vista Partners was one of them that did it recently, and still money is willing to be put to go to work. So with a lot of money and a deteriorating kind of atmosphere, do you see sort of bad behaviors picking up, this lender-on-lender violence, or maybe more risky things, taking out more leverage? Is it sort of fueling some of the risk-taking that maybe shouldn't be happening?
Well, I'm not sure it's risk-taking, but people will certainly get creative in terms of how they can capitalize their businesses, and there's going to be ways of doing it, within the existing credit stack, and coming up with clever ways to potentially put more capital into the balance sheet that actually might be less favorable to existing lenders. There's always going to be smart lawyers and private equity technicians who figure out interesting loopholes to create more capital.
But again, just to drive home the point, I wonder within that if that's a troubling turn, that you're starting to see these lenders pushing people down the capital stack and willing to go above them. And again, this sort of lender-on-lender violence, as it's called.
Yeah, I think, look, it's a market. I think it's a clear market. The market clears at certain places. I think there will be some behavior that's challenged in courts, but there's also some of it that's just an evolution of the markets, and people adjust and adapt. And future credit agreements will be amended to adjust those things. I want to come back to a big opportunity that we're seeing, which is really in preferred equity. So one of the interesting things that we've been doing is in these growth companies, let's say they do have 6 turns of debt, can only afford 4, we've been putting in 2 turns of preferred equity. We think those are really interesting risk-adjusted securities because on the one hand, the company is right-sized. It has a more affordable stack of debt, and it continue to grow. And we get a very nice low to mid-teens type core return on our preferred equity. Plus, we have usually some equity upside through warrants, options, other abilities to participate in future upside. And we're downside protected because we only have 4 turns of debt above us.
So you're protected all the way. But what about the investors which are looking for exits and they're simply not there at the moment? I just wondered, is that imaginative structure of financing that you're creating and putting in there, which keeps the businesses alive, but does it extend the IPO much further into the long grass? The traditional exit, is that what you're doing? You're giving yourself time and breathing space to face a better market in a better day.
Exactly. That's definitely true. We are starting to see, obviously the IPO market has been driven by just sexy mega cap, large tech opportunities, right? Which is not applicable to most businesses. We have started to see trade buyers, strategic buyers start to come back. So we have over the last 6 months have actually had interesting approaches from strategic buyers for our assets. I think they often might be smelling an opportunity that private equity is motivated to sell, and maybe there's a deal to be struck.
Are you motivated to sell? Are these bids, where are these bids coming through? Which sectors?
Well, we recently struck one with a trade buyer last fall that was a good, very strong, 2.5 times return for us in little over 2 years. So some of these are good, attractive returns that you're generating, especially if the strategic buyer thinks you have an attractive asset that's going to enhance their business and create synergy value for them, so they can afford to pay you. So we're not taking discounts on these deals.
Right.
But you have to own good assets. It all comes down to owning, good businesses at the end of the day.
Just quickly, Oliver, I mean, and this sort of applies to what Manus is talking about there being a lack of IPOs and only the sexy mega cap companies, as you say, are getting bids. Is a lot of this market underloved and prime for you to come into public markets to take private?
Yes. Take privates have been a massive opportunity for us as a firm, but I think for private equity more broadly. We've done, just in the last 9 months, we've completed 2 in the UK and we have 1 underway in the US. There's a lot of companies with less than, call it, 3-4 billion of market cap that are just ignored by the market. There's not enough institutional interest in them. Then the banks stop writing research. Then there's even less interest. The shares are very illiquid. And if you come in with a nice premium, it can be very attractive to the board, to the shareholders, and frankly, the management. Management often feels in those businesses they'd actually rather be driven by private equity ownership because, we take a 5-year view. We have a clear strategy. They talk to one set of investors.
You're giving out equity to the employees. Are you going to? There's a few other people. But is that a big part of it?
Yes, there's compensation benefits to it, and also less disclosure on the compensation, which is a positive thing in some instances.
You want to tell us who you're looking at?
Oh, I can't talk about that. I can't talk about that.
Thought we just go in for the last kind of.
Yeah, no, I can't do that.
Fair enough.
Yeah, I would get in a lot of trouble if I did that.
Okay, we'll put you out of your misery. Oliver, thank you so much for joining. We really appreciate your time this morning. That is Oliver Harman of Searchlight Capital Partners. Okay, let's stick with private equity and credit specifically for a while longer. I spoke with Carlyle's Mark Jenkins and Goldman's Christina Minnis on how they're navigating through various macro risks and how that impacts their investment strategies. Take a listen to our conversation at the Bloomberg Invest Conference.
34 years ago, I didn't pay any attention to it. I mean, I think 34 years ago, you focused on the micro level. I think after the great financial crisis, we said, wow, we should focus on macro and micro. And I think after we came out of the pandemic, the Russian invasion of the Ukraine, we said, geez, geopolitics is actually pretty important. And, just to give you an example, if you look at container shipments today, all right, with the Israel, the conflict in the Middle East, if you will, what's basically happening is the Houthis are basically shutting down that area, which accounts for 15% of global trade. 80% of shipments that went through the Suez Canal are re-diverting. It's adding an extra 15 days to deliveries, and you can figure out what that cost is. So we came out of this very global environment, which we realized how fragile it was through the pandemic, and that it was overly complicated by global conflict, right? Like another great example is, if you remember in the Ukraine, when Russia first invaded, basically there were these clips, plastic clips that were made that were to hold together in the automotive process wires. And guess what? They're probably cheaper to make in the Ukraine than they were in Germany. And so that's where all of them were made. And once they stopped being made, guess what? You need that clip. You can't make a car. And that just showed how fragile the environment.
And Christina's just continued. Now we have to deal with political volatility in France. That has had quite the impact on bond markets. So how much does it come across your desk day to day?
It's interesting. It's much more acute than it ever was. When the situation in France evolved, in the last week or so, the markets reacted very aggressively. Now the markets have settled down here in the U.S., but talking to my colleagues in London, any company that has exposure right now in France is very concerned, right? And so, I think we would never have paid much attention to the French elections, but now we're paying close attention. And so I think it's just one more element of volatility we have to pay attention to. And to Mark's point, we recently underwrote a situation where 40% of the company's production came basically out of China. And 5 years ago, we would have thought about it. We would have thought about the risks and probably moved forward. That's a pretty significant risk issue to handle, and how you price that and how you're going to package that for investors. So it's 100% front and center in a way that it hasn't been.
That was Carlyle's Mark Jenkins and Goldman's Christina Minnis speaking to me at the Bloomberg Invest Conference. We'll have more on the world of finance coming up here on Bloomberg Brief.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key.
You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
It's been my brief. I'm Manish Rani alongside Danny Berger here in New York. Jefferies' profits soared in the second quarter. The investment banking revenue momentum continued. Debt underwriting more than doubled. President Brian Friedman said this: "We are well beyond the green shoots, and we would suggest a broader recovery in capital markets activity, and M&A is underway." Ring a bell. Shanali Bassig, day 3. She's recovered from Bloomberg Invest in New York. Great two-day gathering. So well done to you.
Thank you.
And the whole team. Danny and I were there for parts of it. We've just seen Danny. Talk to us about Jefferies. I mean, this is like, come on, second half, bring in the bonus time at Jefferies.
And Rich Handler is saying second half of 2024, second half of 2025, a lot of optimism. I've got to say, speaking of Bloomberg Invest, very interestingly, a lot of people don't feel the same way. PJT's Paul Taubman said people might wait until next year until they do larger deals. The reason you might see a different tone over at Jefferies is because that leaning into private equity sponsors in a much bigger way, and also to kind of mid-sized deals. Importantly, a lot of the drive higher in investment banking fees came from underwriting, which is also more particular to Jefferies than it would be to a lot of more pure play M&A focused advisory. Of course, debt markets have been booming with the anticipation of at least one interest rate cut. And so you're seeing that feed through the underwriting results in particular. And we'll see for M&A, but they are certainly optimistic.
So we have a couple different banking threads to pick apart, Shanali. Another one of them is UBS. The team at Bloomberg, they obtained a memo basically saying we're reorganizing our wealth division. Well, what are they doing?
Well, a couple things. One thing that's really interesting is they're bringing over Michael Camacho from JP Morgan, longtime leader in their asset management business, a longtime leader in commodities businesses over at JP Morgan. And so they're bringing in fresh talent in addition to what they saw over from the Credit Suisse deal that they're elevating people from as well. Remember, this is only roughly a month after they really elevated and created a new leadership structure around Rob Karofsky, who is a longtime Deutsche Bank and Morgan Stanley executive before joining UBS. And since joining UBS has only been rising, he and Iqbal Khan are in the succession plan when you think about Sergio Armati. And their plan here, Rob Karofsky now leads the U.S. business, Iqbal Khan moving over to Asia, is to build up that wealth management business so they can invest more, also client assets and alternatives, the hot moment of the day, of course, and lend to those wealthy individuals more. Listen, UBS has been pushing into this world even harder for a very long time to try to really serve those wealthy clients in different ways. But I've got to say, what's interesting about this restructure at this time, or this reorganization, is that it comes at a time where you also have Goldman Sachs, Morgan Stanley doubling down on alternatives for their clients too. And so it meets the need of the moment.
So we had financial stress tests, and I think JP Morgan's line was, this is better than we even thought it was going to be. I mean, this is about how you run your business, how much capital you need to run your business. Speaking of UBS, of course, they're under a lot of pressure from their regulator to add more capital. That's the risk for them. And here we are in America. This playing field is becoming again, and this is going back to Armoti. Armoti, for the past 15 years, has basically said this playing field is not even, and here we are. Is the good old USA tipping the scales again in terms of the stress tests and capital.
And says the bank that if you look at the Federal Reserve's chart here, Deutsche Bank and UBS, actually in the divisions that they have here, the drop in CET1 was actually much more severe than you saw at the big US banks for their US division. So when you look at the US divisions, what was interesting here, yes, of course they all passed with flying colors, but the drop in the CET1 ratio was more than before. And that comes at a time where they're looking at the Basel III endgame, thinking about those capital requirements. And so a lot of concerns under the surface, questions about payouts as well, given some of these banks, Goldman, Morgan Stanley, the drop was above the median.
Shonali, thank you so much for coming in. After a busy 2 days for you, Shonali Bassick, who leads our finance coverage. Okay, another stock that we are watching this morning, it is Nike. Apparel giant is set to report earnings after the market closed. For more, let's get over to Bloomberg's Dasha Afanasieva, who joins us. Dasha, it's been kind of a confused picture for the retail and consumer-facing companies. For every weakness in an H&M, there's a pool that also says things are weak, but then, there's a FedEx where results are strong. It is confused. So what kind of clarity can Nike give us?
I agree with that. Yes, it's actually confused, and it's these kind of legacy players that, like Nike, that maybe looked relatively really good because they were constantly compared to Adidas, which was doing so poorly, and now that Adidas is stepping up its game, Nike's under pressure, and then there are these other competitors like On and Hoka. And I think now the chief executive, John Donahoe, is really under pressure to explain how is he going to bring back growth, to bring back top-line sales growth. So investors are looking for new product launches, for new strategies, for more cost-cutting. They've already been cutting some jobs in some of its offices, and I think people are expecting more detail on that. There's also a demand for some more detail on its China push. Bloomberg reported earlier that it's looking to sell things like cashmere ponchos and lambskin bras and $1,000 Air Jordans in China, because that's a very competitive market that historically has sometimes shunned Western brands, and that market is really important to fight for.
Yeah, well, certainly the $1,000 sneakers in China, it's going to be a question as to whether that's really going to drive them back to that 20% of their overall revenue coming from China. It's dropped significantly. Dasha, thank you so much for being with us this morning on the Nike story. Coming up on this show, it is the first presidential debate between President Biden and former President Trump. We'll debate that context on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lyons deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
This is Bloomberg.
Let's get you set up for your trading day on this Thursday. U.S. GDP and initial jobless claims will come at 8:30 a.m. Eastern. And then we've got another bond auction. The Treasury is going to be selling $44 billion worth of 7-year notes at 1 p.m. Then President Biden and former President Trump face off in their first presidential debate. That's at 9 p.m. Manish, I'm really interested to see how this works with the mics being muted, no live studio audience. It should be interesting, to say the least.
Let's see if there's any fireworks. And of course, we've seen a couple of different previews on that. The audience hoping to get some direction on policy. Some stocks to watch. Micron, we've touched on it several times. Extending the drop. The forecast missing the lofty expectations on the traditional side of the business, not so much on the AI. Levi reported sales that slightly missed expectations. Profit beat expectations, but the company reaffirmed its full year guidance. The stock down 14%. WBA up 2.5%. Walgreens earnings before the bell. Consumer spending will be in focus. But of course, it is all about tech, Danny, and the flow of money. And we've got something nice from Goldman's on that.
That's right. Goldman just out with this, that hedge funds have been aggressively selling tech. They sold the most in this month on record going back to data since 2017. So the momentum feels like it's starting to turn now, Manis.
Yeah, but the weighting of tech has been like at a really historical high. Fast money, sharp money goes to the gate first.
Looking at your portfolio of businesses, it is about resilience, it's about pressure, it's about women. Like, so how does that come together how does it manifest in the deals that you're doing now?
Yeah, it's one of the things that I became increasingly passionate about after I retired, was acknowledging the fact that focus and this performance mindset was a huge asset that I had gained and that I had worked on and perfected for over 20 years. And now working through brands and founders, I just recently announced a collaboration with the Amman Hotel Group where I bring in the best talents in sports recovery and performance mindset in retreats and offering it there to their clientele. Our first one is actually in Phuket in February. So working through what that means, I mean, if you see the stats of Fortune 500 female CEOs, 80% of those women have played sport competitively through their life journey. And all those skill sets that they've built, to me, they were part of this first chapter, right? But how do they now apply to everything else I'm doing? And I'm so curious and interested in how I can bring that to the audience now and make it more mainstream and accessible.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
There's a bit of fog here when you think about the 2025 outlook that the election is creating.
As we talk to people, they do think that Trump is more market-friendly than Biden.
If you have a second Biden administration, I think you know what you're getting in terms of policy. Both candidates are going to run on more spending. This is going to be a bond market issue. The range of outcomes in the election is vast, and we have to be super humble about what's going to happen.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
I've genuinely forgotten how to do this. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance. Equity futures negative by 0.1% on the S&P 500. The main event, it is debate night in Atlanta, Georgia, 9 p.m. Eastern Time. The President of the United States, Joe Biden, facing off with the former President, Donald Trump, the first debate of this election race.
At a time when people are wondering whether something pivotal could really shift the odds, there is a sense right now they are neck and neck, at least according to the polls. The latest one showing that Trump is edging ahead. What could potentially move the needle? If there is some sort of flub, could that reset even the top of the ticket, which is something we heard last week?
And the next debate is not till September. So if there's any sort of gaffe or any sort of big moment that could hurt one of these individuals, it's going to be replayed and replayed. When you start looking at some of the polling, though, who's actually tuning in tonight? Who do they need to get to? It's those double haters and those individuals that have not made up their mind. And Jonathan, CBS YouGov says there's only about 1 in 5 voters planning to actually watch the debate to look at some of their plans and policies to decide who to vote for. Because these
Can we just talk about the debate before we get into the policy? It's June 27th. It's June 27th, and we're talking about the first debate of this election cycle. The conventions haven't even happened. Why is this happening so early?
Exactly. It's the first presidential debate ever in history, which is why there's so many firsts about this debate that makes it so interesting to watch. It's happening now. Remember a few months ago, we were sitting around this table wondering, would these two individuals ever even spar again? And here they are this evening. But again, it's a few long months till September when they meet again. So whatever happens tonight, this is why it feels so high stakes. Besides the substance, the style is also going to be important.
A lot of market participants very focused on the US dollar. A little bit later on this morning, we'll catch up with Deutsche Bank's Alan Ruskin. This is what Deutsche Bank's got to say on the US dollar: stronger for longer. Here's the quote: "Our forecast is highly dependent on the US election and the extent to which an aggressive protectionist trade policy is pursued. If this is the case, we'd like to revise our euro-dollar call to parity." That's how big some of these calls are for 2025.
I actually highlighted that, bolded it, and put it in green in my notes because to me this is really the interesting stakes of this. If there is a more protectionist, higher tariffs kind of policy, how much does that lead to dollar strength and, frankly, ongoing American exceptionalism, at least in markets? This is sort of counterintuitive. Some people saying it will hurt the economy, it will bring up inflation, it will slow growth. But guess what? It's going to hurt everybody else so much worse. And that is certainly what a lot of people are trying to see, whether to bake that in.
If you are the BOJ, cover your ears a little bit later tonight. Dollar yen 160.48. There's one single name at a pre-market we need to talk about as well. It's Micron. It was all about NVIDIA in the last week. Micron's down by about 6% in the pre-market, Bramo, missing some very, very high expectations. Citi coming out and calling the guidance, quote, conservative.
Okay. Let's just put the actual numbers on this. The guidance was that fourth quarter sales would be $7.4 billion to $7.8 billion. The average analyst estimate was about $7.6 billion. So it's in range. To me, what this highlights is basically there are sky-high expectations for companies that have been associated with AI. They have baked in long runways and this idea of huge profitability. And if these companies can't deliver, they're going to get penalized massively. The shares of Micron had rallied 67% ahead of this earnings report. How many other Microns are there? Stocks that have become AI darlings without the numbers to really prove it.
This one getting punished, down by almost 6% in the pre-market. The broader scores look like this. Let's kick it off with the S&P 500, negative by 0.15%. In the bond market, the 10-year 433.33. The euro just south of 107 at 106.97, and crude just north of 81 at $81 and about 32 cents. Coming up this hour, fantastic lineup for you. We'll catch up with Chris Morangi of Gabelli Funds ahead of tonight's presidential debate. Deutsche Deutsche Bank's Alan Ruskin on why the US dollar will remain stronger for longer, and Maya McGuinness of the Committee for a Responsible Federal Budget. That one's still elusive. We begin this hour with our top story. All eyes on Atlanta tonight. President Biden and Donald Trump going head-to-head in the first presidential debate of the election campaign. Chris Marangi of Capelli Funds writing this. The tough part about this election is it's not entirely clear which candidate is truly better for the market. Chris is with us around the table. Chris, good morning to you.
Good morning.
Two focal points for you coming into this election. One is election dynamics and two is policy. Can we start with the former, then we'll get to the latter? What do you mean by election dynamics?
Well, there's a whole dynamic of actually running this election and having an elected president on November 6th and one that's inaugurated in January. Obviously, we've been here before. We've seen these dynamics play out, and the institutions have survived. But it's, there's going to be some stress around it, and we'll see how the consumer and the economy reacts to that.
Was January 6th, 2021 sort of a case study for that?
Possibly, sure. I mean, and obviously you've got Bush, Gore, and other instances. We live in a different world, and I think the good news is, if you can call it that, is that we've got experience in this new world.
If that is a concern in these election dynamics, that means likely a lot of volatility for the markets. How do you prepare for that?
Yeah, I think the market has been a little complacent, actually. We haven't talked about this election enough. I think mostly about the fundamental policy divergences between the two candidates. Now, one could argue that part of the run for the Mag 6 and NVIDIA in particular are people just hiding in those names because they have such great secular dynamics and balance sheets that you don't have to worry about the election. But obviously, at this point, when we're making an investment decision, we're thinking about, well, what would this company's fortunes look like under a Trump versus a Biden administration?
Do you have a clear model for that? I mean, can we really say that we understand the policy from either of them fully?
Well, it goes back to the quote that you started with, which is, I don't know which candidate is truly better for the U.S. economy and for the market. We all remember, 2016, obviously, and the run that the market had upon Trump's election, and I think that's going to be going through most people's heads as we see the results of this election. So the knee jerk, I think, would be for the market to go higher on a Trump win. But there are other elements there, including perhaps a greater inflationary policies, tariffs, et cetera, which we have to first of all gauge how serious he is about those policies and what the impact is on a variety of stocks.
So is this just sort of watch and CYA, or is this actually do something now to prepare for?
I think it's find good companies with strong balance sheets,
like NVIDIA.
Sure. Well, that's why that's why we're favoring what we call sort of defensive quality names. I talk about utilities, I talk about some industrials with recurring revenue, et cetera. I don't think you want to be taking a whole lot of risk ahead of this election.
I can think of a country with some strong companies, really good balance sheets, France, for instance, and those companies can drown in messy French politics. Is there something about that that's uniquely French? In the UK, is it uniquely British? In Mexico, is it uniquely Mexican? Are there things that we can get away with in America that other countries can't?
There is certainly something to American exceptionalism, but I think each of those cases is a little bit of a warning. I think we own a number of stocks in Mexico. We still like Mexico as an investment place. But we were caught a little bit off guard. I mean, everybody expected Claudia Sheinbaum to win. I don't think anybody expected to win to the extent that she did. But look what happened to the peso. So, I think that is a little bit of a fear, is that suddenly the market wakes up in November and decides they need to change the outlook.
Just to be clear, have you held on to those positions in Mexico?
We've added to them.
You've added to them?
Yeah, I think Sheinbaum will actually be a little bit more moderate than AMLO has been. And, they look even more attractive today, given what's happened to the peso.
Can you share with us what those investments are?
So one of them is Grupo Televisa, which is a media name that actually has almost half of its value denominated in U.S. dollars, with their stake in Univision, which is a U.S. company, obviously Spanish language broadcaster, that's going to be a huge beneficiary of this election.
Would you do the same thing in the UK, in France, off the back of some of that? If you saw in France adverse developments politically that drive markets in the wrong direction, would you add positions there as well?
The core of Europe, I think, is a value trap. I'm sorry, John, but
I'm not taking it personally. Don't worry, Chris.
There's I'd love to view it as a safe haven, as a place where we can get away from these U.S. dynamics, but I think they're worse in the core.
They're worse. So this kind of goes back to our initial question around the dollar. We were talking about Alan Ruskin, the conversation we're going to be having with him, that basically a lot of Trump policies are going to end up really favoring the dollar regardless. How much does it sort of lead you back to U.S. companies regardless? Because as dysfunctional as it might be with either Trump or Biden, it's going to be better than elsewhere. In other words, does this get back to the Steve Eisman point that none of it actually matters, that maybe people are getting a little bit over their skis with how different both of the candidates will be for the market?
Yeah, listen, obviously there are a lot of other factors to consider, including, is this a Republican trifecta? And, one of the things we saw from Trump in his first term was he was very sensitive to the market and would back off certain policy measures when the market appeared not to like them. So, that's why I say it's a little part of why I say it's a little unclear as to how this plays out. But yeah, listen, I think this election in many ways goes to our strengths, which is we have a home bias in the U.S., which is not always good, but I think it's probably a pretty good place to be.
So you started out talking about how everyone's probably hiding out in NVIDIA, in part because they don't want to get away.
Not us, but yeah.
Of course not. No, you're hiding out in other names. But there's this idea of trying to hide out in names that you know ahead of some of this uncertainty. It kind of speaks to the lack of breadth that we've been increasingly seeing in markets. Bespoke Investment Group came out with the statistics that I thought was just shocking, that today or yesterday, the S&P 500 rose on negative breadth for the 5th straight day. That would tie the longest streak going back to 1999. Does this give you pause that should there be conviction on some level, you're going to see a sell-off in the names that have been the ballasts for this market and drag down the entire index regardless of whether you see strength in the economy and, frankly, consistency in policy?
It's why we recommend clients not necessarily own the index or have some diversification beyond just owning an S&P index fund, because that will, I think, happen. What goes up will come down, and there will be mean reversion. I don't know when that will be. But it's been obviously frustrating for those of us who are not overweight the Mag 6. We own some of them on the value side. Our growth team owns all of them. There are some bargains, obviously, in those other 494 names. And in small cap in particular, which I've been on here talking about, there is, I don't want to talk about being a barbell, but we have some risk on the small cap side, which would benefit in a soft landing or rate cutting scenario, more levered, more cyclical. But then, we're sticking to some defensive larger cap names.
When you look at what you should be in ahead of November, do you have a base case on the outcome of not just the president, but also Congress?
I have Chris Morangi's base case, which is that it will be a Republican trifecta. I think that's those are where the odds look right now.
In that sense, we did see a lot of the market basically unnerved around a lot of debates when it comes to the debt ceiling. If you think it's a Republican trifecta, does those sort of issues in Washington basically get a lot easier because House Republicans will, of course, want to just basically get on board with what President Trump wants to do? I
think one thing is for certain, and that we're not going to see fiscal sanity with either candidate, with either president. We're not even going to go there. Obviously, patching the Trump tax cuts will be easier with a Republican trifecta, and we'll have less friction on that front. Whether that's a good or bad thing is another question.
Yeah, my sense is blue wave or red wave. If we get either of those, this Treasury market sells off and yields rise.
I would agree with that. The question is, if you get some sort of joint effort or joint sweep, how much is it worse under one than another? And I've seen opposite expectations from both. So again, you can pick all of the election outcomes correctly and still not understand the policy and market ramifications.
We'll have this conversation for the next 5 months. Chris, looking forward to doing it with you. Thank you, sir. Chris Morangi there of Gabelli Funds. Equity futures right now on the S&P 500 recovered just a little bit. We're negative by 0.1%. With an update on stories elsewhere this morning, here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. UK Prime Minister Rishi Sunak and Labour leader Keir Starmer have gone head-to-head in their final TV debate before next week's election. Economic proposals have featured heavily during the BBC event. Starmer accused Sunak of being out of touch and attacked the Conservatives' record in government. Sunak hit back at Starmer on taxes and migration. Wall Street's biggest banks passed the Fed's annual stress test, paving the way for higher shareholder payouts. All of the 31 lenders assessed staying above their minimum capital requirements during a hypothetical recession. JP Morgan said the test results are rosier than their own projection. Amazon has joined an elite group of companies. The tech giant reached a $2 trillion market valuation for the first time ever yesterday. The AI rally has pushed the company deeper into new records. Even so, Goldman data just out suggests that hedge funds are selling tech aggressively, with June's net selling of the sector on track to be the largest on record, with the bank's data going back to 2017. And that's your brief, John.
Hey, Danny, thank you. We'll catch up with Danny in about 30 minutes' time. Up next on the program, it all starts tonight.
During the previous administration, my predecessor made promises which he broke more than kept.
Now under crooked Joe Biden, the world is in flames.
My predecessor failed the most basic presidential duty.
I just want to debate this guy.
It's this on repeat all the way until early November. That conversation up next. This is Bloomberg.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center.
And that's news when you want it with Bloomberg News Now. Get it 24/7
on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Live from New York City this morning. Good morning. Quiet start. We're down by about 0.1% on the S&P 500. In the bond market, some stability for you. What a 10-year, 432.55. Under surveillance this morning. It all starts tonight.
During the previous administration, my predecessor made promises which he broke more than kept.
Now under crooked Joe Biden, the worst president in the history of our country, the world is in flames.
The president, my predecessor, failed the most basic presidential duty.
He's not getting the job done for America. He is incompetent, ladies and gentlemen.
I'm a grown man running against a 6-year-old.
I just want to debate this guy.
So here's the latest. President Biden and Donald Trump taking the stage for the CNN presidential debate at 9 p.m. Eastern tonight. James Lucia and Capital Alpha seeing 3 likely outcomes. A boring snooze fest, the start of a longer-term story, or a catastrophic error by one candidate that could decide the race. James joins us now for more. James, good morning to you. Out of those 3 likely outcomes, what's your money on?
My money's on the snooze fest, frankly. Presidential debates tend to be 90 minutes of pure boredom, waiting for someone to make a catastrophic mistake. And that's what we'll be looking for tonight.
When it comes to catastrophic mistakes, potentially, that we could see this evening, James, do you think, what are the vulnerabilities for both of these candidates?
Well, I think there's absolutely nothing Donald Trump can say at this point that would shock the public. He's already proposed having UFC fighting competitions for undocumented migrants. He can say anything he wants as long as he says it in a genial way with a smile. It's all about Trump's temperament here. Whereas I don't think anyone's really listening to what Joe Biden says. They want to make sure that Joe Biden does not freeze at any one moment. And really about losing temper versus freezing up on camera.
What do you make of their individual debate prep styles? They're very different this time around.
You can't see a more spectacular comparison. At Camp David, the Biden administration has built in an airplane hangar an actual mock-up of the debate stage they'll be on. Biden has taken off the entire week to stay at Camp David, to rest up, to get his exercise, to dedicate all of his energy to 1 hour and 30 minutes of focus. Whereas Trump has been doing his usual thing, going out and talking to people and just staying loosened up. It's sort of the hyper-controlled, hyper-prepped, hyper-study model versus Donald Trump's just let it go. And the fact is that most people really do need to study and prepare and be disciplined. But people like Trump's style of just letting things rip. And either way it could work. Frankly, I would bet on letting things rip in this circumstance, as long as Trump does it in a genial way, an affable way, a charming way. He could have a very good evening.
But isn't that going to be harder in this debate, given the fact that the second your allotted time is up, the mics go dead and they're muted?
That can work both ways. In the first debate in 2020, then President Donald Trump had just been diagnosed with COVID, and you could see his anxiety coming through. He felt that he had to destroy Biden on screen, and he really went over the top. Having the mics turned off would mean that Trump could not interrupt Biden or badger Biden. On the other hand, it could work both ways. I mean, having the mics turned off means that Trump will have to keep under control. It means that Biden also, needs to maintain his own focus through his own allotted times.
You know, I'm just struck as you're talking, James. We spent the first 15 minutes of the show talking about how it does feel like a toss-up. This does seem consequential, and yet, regardless of the consequences, it is very difficult to predict the policy ramifications of that. James, when you talk to clients, what are you advising them to listen to? What are you looking for as an actual consequence for both policy and us in markets?
Well, frankly, a lot of it does come to the election outcome, because if we have a narrow election outcome, even if you have a Republican trifecta, as you mentioned a few minutes ago, narrow margins doesn't necessarily mean that you're going to be able to make big changes. Either president will have to deal with the congressional majority that he has. So while people are predicting the eschaton, I think, in fact, we're looking at probably a narrower range of outcomes, because both potential candidates would have a very difficult hand of cards to play if they become president.
We were speaking with a number of strategists over the past couple of weeks who indicated that there is this possibility still, especially because of how early this debate is being taken place, that if there is some catastrophic error, particularly by Joe Biden, that he could potentially be replaced at the top of the ticket. Do you adhere to that kind of thinking?
I don't, because I think it's too late. The scenario here is inherently credible, that Barack Obama, Nancy Pelosi, John Clyburn, the great and good, the eldest of the Democratic Party, would go to Joe and say, Joe, you've done great service to the Republic, but now it's time for you to move on. You still run in, though, to the Kamala Harris problem, which is that I don't think there is any viable alternative to Kamala Harris for the Democrats. It's not going to be a white guy. It's not going to be Gavin Newsom. No matter how tall he is, no matter how good his hair is, you still can't overcome the optics of displacing a black female with a white male candidate. If it's a Gretchen Whitmer candidacy with Josh Shapiro as vice president, maybe you could do it, but the fact is, I think the odds are very, very low. It would take a truly spectacular moment for Joe Biden to try to replace him before the convention. And the convention itself, we haven't had a real political convention that actually chooses candidates since probably the 1920s. Really, it's a very dicey maneuver to say to your assembled delegates that, guess what? We're going to ask you to recall your reptilian DNA, to go back to the way you used to operate 100 years ago and choose or ratify a candidate. So I think it's basically Joe Biden or Joe Biden.
James, I understand the odds are very low for that, but the fact that we are having this conversation and that a lot of people are coming on this program, Greg Valliere having these conversations, does that mean the damage is already done for the Biden campaign?
I think it is largely baked in, and you can see it in this sense of massive preparation. Again, going back to the New York Times, the Maggie Haberman story in the New York Times about them building a mock stage for Joe to practice on, it does show, I think, that the damage has been done. And frankly, that's why we have a very unique election here, where the incumbent president, who normally has an overwhelming advantage, does not in this case. Incumbent presidents in the second quarter of the year usually have a huge financial advantage over their opponents, and they use it to great effect. Joe Biden dumped $30 million of negative advertising on Donald Trump in the second quarter. Since Trump's conviction, he has dropped another $50 million of negative advertising on Donald Trump, and it's had virtually no effect. The election is almost tied. And instead of arguing on policy, Joe Biden's advisors are working with the president to find him ways to needle Donald Trump, to provoke some sort of outburst, to get the angry Trump instead of the jolly Trump. And so it's literally, as the great Dan Henninger, a good friend of mine, put it, we're having a debate about who has the most powerful office in the world. And it's all about which of these two elder gentlemen has the biggest problems with his own mental health.
James, we'll get you with the promo for our coverage a little bit later. Snooze Fest coming up, 9 p.m. Eastern Times. James Lucia there of Capital Alpha Partners. Really echoing, I think, the way a lot of people feel about this election in this country this year.
90 minutes of pure boredom waiting for someone to make a catastrophic error.
Yeah.
Kind of feels like what we've been talking about on repeat, this idea that it feels like either way, unclear, unless something catastrophic happens. He was deadpanning there some of the most, inflammatory comments. That is how everyone feels about one of the most unpopular races I could possibly imagine.
At the end there, James was talking about all this money the Biden campaign is using right now to go after the fact that Trump is convicted. He was convicted guilty in this Manhattan trial. The New York Times Siena poll says more than 2/3 of voters said that outcome made no difference to their vote. This was supposed to be potentially one of the vulnerabilities they wanted to harp on when it came to the former president.
It makes it so difficult to try and predict 2025. I often think about this, how difficult, how different the Biden presidency would have been if the Democrats didn't win the Georgia runoffs in early 2021. How different things would have been for this president.
And to push that forward to the debates, whether they try to cater to the middle or whether they try to cater to the extremes of their parties.
Coming up on this program, we'll catch up with Alan Ruskin of Deutsche Bank on why the US dollar will remain stronger for longer. That conversation just around the corner from New York. Good morning.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool, It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Live from New York City this morning. Good morning, good morning. Your equity market negative by 0.1% on the S&P 500. The equity market more broadly looks like this. The Nasdaq only down by about 0.1%. Likewise on the Russell. Your big move in the pre-market. We'll get to this in a moment. Micron is down about 5% in early trading. We'll turn that page to that story in just a second. Let's turn a page and switch on the board and get to the bond market. The 2-year, 10-year, 30-year looks like this. Your 10-year is stable at 432.74. The 2-year 474.72. Monitoring your supply, your debt auctions. Bramo. Yesterday, what did we get, the 5-year?
Yeah, yesterday was a 5-year. Today at 1 p.m. we get $44 billion of 7-year notes. Yesterday's 5-year auction went all right. The 2-year auction before that went all right. Today, question will be 7-year notes tend to be a little bit messier at a time where you are seeing this creeping higher in yields globally on the heels of a couple of bigger than expected inflation rates.
So far, so good. Look out for that a little bit later this afternoon. Let's get to foreign exchange. I want to talk about dollar yen. When you hear it, Japanese officials say things like rapid, one-sided moves. The weakest level going all the way back to 1986 in yesterday's session. Lisa, dollar yen 160.43.
We were talking about how remember talking about intervention at 140 and then 150 and then 155 and now we're at 160, and the question is, are you going to throw good money after bad into this market to prop it up when ultimately that's not going to work? It really has to come in the form of some kind of rate hike by the Bank of Japan. Is that on tap next month? And that's what an increasing number of people are really gaming out.
Do you think there are some concerns about Treasury holdings at some of these central banks about what could happen if they have to defend their currency a little bit more?
That essentially if they have to liquidate in mass Treasury holdings and potentially anything else, how much does that have an upward pressure on U.S. bond yields and frankly just sort of a knock-on effect globally? At this point, what is the willingness, though, by the Japanese authorities to do that, given that it's had a negligible impact on the actual currency in any lasting form? But you're right, there is this fear that maybe there could be some sort of market knock-on, which maybe is the reason why Janet Yellen was saying, we don't like this. Come on, you gotta warn us in advance.
That started at the IMF World Bank meetings a little bit earlier this year. The Japanese yen showing a bit of strength here, 160.43 on dollar yen. Under surveillance this morning, President Biden going head-to-head with Donald Trump tonight in what will be the earliest presidential debate in U.S. history. Biden spending the week at Camp David preparing, while Trump's been on the campaign trail. Anne-Marie, you can often learn something from how someone's campaigning, where they're campaigning, and who they're targeting. What can we learn from what Donald Trump's doing?
Well, what he's doing is he's going out, and even on some of these rallies he's been to, he's riffing off the audience. Should I be tough? Should I be nice? How should I go into this? And that's actually something he's not going to have this evening, which some analysts are saying potentially that hurts Trump. Trump does like to get that energy from the audience. But what he's doing is out and about campaigning ahead of this. Biden has been hunkered down. He has been at Camp David. He has someone filling in as Trump, bashing him and doing all these things that potentially they should be planning for. So very different styles ahead of this debate, but both are prepping, just maybe in different ways.
You know, when James Lucier was talking, it struck me, how seriously do we take the presidency at this point? How much do people try to say it's actually not that important that one man cannot single-handedly do all that much, given the infrastructure of the governing body, given the fact that you've got the Congress and the power that might be inflicted? That might be the angst underneath the market right now. This lack of clarity under just how much power, how much clout one person atop the Republic can really change all the policies that we have in terms of tariffs, et cetera. That's one of the anxieties, I think, really underpinning the lack of market response to some of the iterations that we see in this campaign season.
And to John's point earlier, though, before we get to any of these policies we can hear from these individuals, it's really going to be about style tonight. People want to see, is there going to be a gaffe? Is there going to be a stumble? Political this morning has it this, call it the highest stakes hate watch of any modern presidential campaign. But more than 70% of Americans plan to tune in. So it's those people who are undecided that they maybe have a chance of trying to flip.
Yeah, I draw the comparison to sport analysis. This is going to feel like halftime in a football game and not halftime of a political debate with serious implications for the country and how the economy's managed. It's going to be about performance, style, energy. Are they focused?
Yeah. He's looking a little angry. I don't know. He's looking a little tired.
That's the state of things right now in U.S. politics.
That's the reason why I go to how seriously do we take this office? I mean, given what James Lucier was talking about, how much are people going to actually look at that and say, what's the knock-on effect of policy? Is that even going to be in the discourse tomorrow morning?
We'll catch up with Henrietta Trace in the next hour. Look out for that conversation. Elsewhere, shares of Micron falling in the pre-market. The chipmaker's outlook failing to satisfy investors, even as revenue jumped 82% in the last quarter. The sell-off highlighting the challenges companies face meeting sky-high AI expectations. Their stock is down about 5%. Difficult really to get a read on how much of this was just disappointing very high expectations around AI and whether the more traditional parts of the business sort of underwhelmed a bit here.
Well said. Mike Wilson of Morgan Stanley saying that the sort of AI momentum trade, the enthusiasm, isn't necessarily creating a bubble in the likes of NVIDIA, but is carrying along some stocks that might not deserve to be carried along. And you wonder how many stocks have seen their share prices increase dramatically, not because they actually are offering the goods, but because they are riding the wave of sentiment that has lifted a lot of names very dramatically. And that's what I think the fear is underpinning Micron.
That move is not dragging down this market. Equity futures negative by about 0.1% on the S&P. I want to talk about foreign exchange. A gauge of the US dollar hovering near an 8-month high after a slew of economic data might drop at about 8:30 and change this story. We'll get jobless claims and durable goods, as well as a third read on first quarter GDP. Alan Ruskin at Deutsche Bank's been writing this with the team. The dollar will remain stronger for longer. The big dollar cycle can barely be called a cycle. Alan joins us around a table. Alan, good morning. It's good to see you. Yeah. This is quite a call. Stronger for longer, and you've got quite a call in there around euro dollar based on the outcome of this election, what may or may not happen around trade policy. Can you frame that for us? How important is the next 12 months going to be?
I think it is going to be very important. So I think, you have the dollar looking like it's going to outperform almost regardless of the election. So, I think we could certainly see euro dollar remaining in the sort of 105, 110 range for a while. We could see the yen remaining weak. A lot of this has to do with weakness elsewhere. It's not really always a dollar positive story as much as a comparison where the US shines. But the election, when that kicks into gear, you start to think in terms of, okay, are we going to get delivered sort of 50% plus tariffs for China? Are we going to get tariffs directed at Europe, at Mexico? All of that sort of changes the dynamic and potentially in a positive way for the dollar. And then the geopolitics as well, the commitment to NATO, the commitment to Taiwan. Those are the two big elements that I think will shape the dollar going forward.
That's what's curious about this call. That policy won't hurt the US dollar. It will help it. There's this line in the note that you and the team put out yesterday with George Saravelos that our 2025 euro dollar forecast is highly dependent on the US election and the extent to which an aggressive protectionist trade policy is pursued. If this is the case, we would likely revise our euro dollar forecast closer to parity. Why won't it hurt the dollar? What is behind that story?
Yeah, I mean, initially it's going to be a kind of classic supply-side shock. Yeah, so it's typically inflationary. The market, I think, will ultimately swing to the left side of the smile, in essence, which has historically been risk-off. Equities tend to go down. Carry trades tend to have a much harder time of things, and the dollar tends to benefit in that environment. It would also likely prompt some sort of Fed response as well. So that's part and parcel of this, which is, again, the Fed will remain tighter for longer. In essence, the dollar will then remain higher for longer.
Alan, though, aren't both these candidates protectionist?
Yes, but I think there's orders of magnitude here, and the orders of magnitude are quite significant in this regard. So I think Biden has played his cards in a sense, and I think the market's view is he represents continuity. So we know what we're getting here. And I think Trump is talking a whole nother level of protectionism, particularly as it relates to China. But I think he's also willing to push back on traditional allies like Europe. And I think that, that's different. And he's already shown in the past he's prepared to put a link between, say, immigration and tariffs with, a country like Mexico as well. So when you're talking about all these major trading partners, if you add them all up, and they're all potentially going to be weaker, then by default, on the other side, the dollar tends to be stronger.
Is there any inflation kind of forecast embedded in that basically some of these policies could be inflationary, keeping rates higher, also giving a lift to the dollar? Is that something that's sort of underpinning some of this thesis?
Oh, no, absolutely. I think, look, if we do see tariffs of the order of, 50% plus directed to China, it's going to come back in the form of higher inflation. And I think in that regard, you're sort of second-guessing what the second-order effects are, because I think there will be pushback to that, and therefore you don't get tariffs of that sort of order of magnitude. But you do have to think, at least, that it sets in train a stickier inflation environment going forward.
It's the late June when people are coming out with game theory around the mental workings of some of these presidential candidates, saying that Donald Trump, if he were to become president and he were to issue some of these tariffs, the market pushed back dramatically, he would change course. Do you adhere to that essentially there's a market put on a lot of these policies? I'm not just talking about the classic Liz Truss type moment in the Treasury market, but also in stocks, if they get a whiff of protectionism really hurting their business models.
Yeah, I do think the market has enormous influence here. So I think the story there is you don't get 50% tariffs, maybe you go back to something of order of magnitude we used to, 10% tariffs. But I don't think we're going to push away all the way back against protectionism. I think that seems to be too much part of the, Trump thoughts in terms of a second administration.
Let's get to one currency pair, specifically dollar yen. I want to talk about dollar yen with you. 160.44. We're talking about levels we haven't seen since 1986. What are your thoughts on how the Japanese authorities are going to basically approach this issue? How big is this issue for them, given their failure over the last month at least to really stem some of the losses in their currency?
But I don't think it's such a disaster, really, because, I think there's a self-corrective mechanism here as well.
What is it?
Well, I think if the yen weakens sufficiently, inflation does take off sufficiently, and they do actually tighten in a way. But I think what you are seeing is little by little, they are letting yields go up. So the back end of the curve has gone up. I think what's interesting is how little the yen has responded. You've actually seen a very substantial compression of yield in favor of the yen. If you just took the 10-year yield spread, dollar yen should probably be trading around 140 at this point in time. So I feel sorry for them, but I think what they're needing to do here is sort of break the momentum. And once the momentum breaks, then you've got yields already on your side, really. But, at this point in time, there's an awful lot of momentum against them.
It begs the question, given the rate differentials narrowed that much, and we haven't seen the response in the FX market, why haven't we? What do you think explains that?
Yeah, I mean, the psychology gets quite perverse. So initially it's, well, dollar yen can't go up on good news, so it must be going down, or the yen must be going down, yeah? So you have that sort of psychology, or the BOJ is clearly just not effective. But eventually, right, it sometimes takes quite a long time. I've seen times where, back in 2001, 2002, the dollar just continued plowing ahead as the Fed was cutting rates. And, it just had a lot of momentum. And it broke eventually. So I think you will see a break, but it's pretty hard in terms of forecasting timing.
A final question, and it's a big final question. It's going to be a long one, so forgive me for going on a little bit here. I've been doing this for a long time. For as long as I've been doing it, I've been interviewing you. I know this is your last day today at Deutsche Bank and you're going to be retiring. I just want to say thank you because you've always been so kind to me, specifically in my early years when I didn't really know what I was doing or what I was talking about. And you helped me along the way. It really educated me on foreign exchange as well. Can we talk to you about your history in the market, 4 decades, and just leave us with a little bit of Alan Ruskin wisdom, please? What's your big takeaway in your career over the last 4 decades?
Whew, that's a big question. You know, I think that certainly in terms of foreign exchange, it's always been exciting. You know, I think we're going through a lull now, a period of, I get questions of, you know, are the heyday of foreign exchange past? And I absolutely don't think so. There's just always something that comes up that is interesting. The world is interesting. You can't predict some of the real economic effects. Politics, global politics looks far from stable. And, you know, so I think there's always, you know, something interesting going on. And we've, to some extent, moved a little bit away from, you know, developed currencies to the EM, now to frontier currencies. So there's always this evolvement. We can find volatility. And I think the markets are going to remain interesting as long as we have floating exchange rates.
Well, you've been a gentleman for a long time, and this community's been lucky to have you. Alan Ruskin at Deutsche Bank. Alan, thank you. Appreciate it. Let's give an update on stories elsewhere this morning with your Bloomberg brief. Let's get to Danny Berger. Hey, Danny.
Hey, John. Bolivian President Luis Arce has sworn in a new army commander. Hours earlier, troops led by the general's predecessor had stormed the presidential palace in an attempted coup. Bolivian troops crashed a tank into the building in a bid to overturn Arce's socialist government. His administration has struggled with an economic crisis amid dwindling natural gas exports, a shortage of dollars, and a currency peg that has effectively collapsed. A Boeing whistleblower alleges that he was retaliated against after raising concerns about a subcontractor's work. The mechanic who worked on the 787 Dreamliner claimed to have observed substandard manufacturing practices. He says that he was fired after reporting the issue. Boeing whistleblower reports have surged since January's mid-air blowout aboard an Alaska Airlines 737. The round of 16 matchups at the Euros are set. Georgia's shock win over Portugal secured their passage to the round of 16, where they meet Spain. Meanwhile, Belgium's 0-0 draw with Ukraine means that they face a daunting clash against tournament favorites France in the next round. The round of 16 kicks off Saturday with Italy's match against Switzerland. And that's your brief, John.
Looking forward to it, Danny. Thank you. More from Danny in about 30 minutes' time. Up next on this program, America's looming debt crisis.
The situation is bad, and it's probably going to get worse. The Congressional Budget Office assumptions are actually pretty optimistic. They don't have a recession in their forecast over the next 10 years, so that flatters the deficit.
That conversation up next, live from New York City this morning. Good morning.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried had pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Live from New York City, good morning to you all. Equity futures on the S&P 500 recovering. We're negative by about 0.1%. No drama here on this board. In the bond market, yields just about unchanged, 432.74. Under surveillance this morning, America's looming debt crisis.
The situation is bad, and it's probably going to get worse. the Congressional Budget Office assumptions are actually pretty optimistic. They don't have a recession in their forecast over the next 10 years. They assume that the tax cuts that were enacted in 2017 expire, so that flatters the deficit. So things are probably going to be even worse.
So here's the latest. The US debt level set to be one topic at tonight's CNN presidential debate. A recent Congressional Budget Office report warning US federal debt will jump from 99% of GDP this year to 122% in 2034. Maya McGuinness of the Committee for a Responsible Federal Budget writing this. 2025 will be a consequential year for fiscal policy. Neither candidate has offered plans for addressing the important fiscal deadlines they will face within the first year of the next term. Maya, I'm pleased to say, is with us now for more. Maya, great to catch up with you. Can we start there? The important deadlines that they will have to face, whoever it is, within the next 12 months.
Yeah, 2025 is going to be an absolutely crucial year when it comes to fiscal policy. So as soon as we're swearing in the next president, the debt ceiling is going to be returning. So that will start in January, but we will have a number of months where there are extraordinary measures. But we know that's something the next president is going to have to deal with. That's been a struggle in the past. Opportunity to save a lot of money, opportunity to add a lot of debt. We've seen both. But they also have the huge expiration of the Trump tax cuts and extending those, which is something both candidates have said they want to do in one form or another, could cost upwards of $4, even $5 trillion. You may see people trying to expand them. We've heard about that as well. We also have the end of the spending caps that were part of the Fiscal Responsibility Act. And so we'll have to figure out what we're doing there. And I'm pretty certain that whoever's president is going to have made a number of promises for more things they're going to do, more borrowing. So it is going to be a year where there's the potential for additions of trillions of dollars being added to the debt, just at a time where the Congressional Budget Office has been warning us we are in deep trouble right now, and we do have to change course. We're not hearing very much about how we would change course.
Maya, there are a lot of people who are listening, including probably some politicians who would shrug off the idea that spending increases and tax cuts in and of themselves